Good morning. Very good to see the new batch, May 24 batch. Very nice to see you all. We'll be starting with our audit syllabus today. For your batch, I'll be coming for these 11 days we'll be doing. First of all, for these 9 days initially, first we'll be doing audit. Then I'll be coming, I think, in the month of September for completing your portion. We'll be doing the portion in 2 parts. You'll also get a book. I think it has just come down. It will come to you very soon. You get a book like this. We are giving in 2 parts because the new portion has arrived. So we are making the note gradually with all the questions and everything. We are trying to input in that. So we are giving in 2 parts. So you get 2 books of audit for this attempt so that everything is organized for you. Okay. My name is CA Kartik Iyer. I teach at Mumbai, Chennai, and Bangalore here. I've been teaching Yashas Academy for around 2.5 years now, and I've always had good rapport with the students and with the batches. I hope this batch is also similar and we have fun in the class. We'll be learning using a lot of songs, memorizing techniques. We'll be doing a lot of hand actions, and we'll see a lot of samples in this first chapter itself, which we'll be starting to. We'll be seeing that. Also, when you're learning audit with me, your mindset has to be not of 40 plus. Whatever your past students, past friends have told, I know they have scared you regarding audit. Audit is a very difficult subject. God knows what will happen in audit, all these things. We have had a past record of 85 marks highest in audit, 80 in law, at each audit and law both, 80 in audit, 85 in audit, 80 in law. Last time also, Yashas Academy highest score was 78 in audit. Overall, India highest was 82 in audit. So you understand that audit becomes a highly scoring subject if you do in that exact pattern in which I tell you. It is a very scoring subject. Or it can either be 40 less than 40 subject for you, or it can shoot you to 60 plus scores in audit. My entire intention is to help you to score 60 plus. So keep that mindset only. Don't rely on the past data because that is the traditional way of learning audit. We are going to learn in a different manner. I'm promising you that with our journey, you will understand that things will become much more easier in audit because my teaching will be a little more concentrated. My entire intention for teaching on audit is to make you all very strong in audit, not only in the inter but also in final, because inter CA in the CA course, accounts, law, economics, all these things you learn at the foundation level. So that becomes the first place where you get a glimpse of these subjects in the CA course. Audit, you get the first glimpse in inter, because in foundation you don't have audit. So my job is not only to help you score well in inter, that we have to, but also to create a very strong foundation for you, so that CA final audit becomes very easy for you to understand, because that base is required. Okay. Let's start with the batch, and along the way we'll see what happens. Okay. So let's see. Keep a mindset 70 plus in audit. Okay. Keep a mindset of how much? 70 plus. Don't let your goals get compromised because of what others have said. Okay. We'll see. Anyone, let's start. Now, I want you to remove your notebook, because the initial first part, today I just in 3 hour session, in case there is a lighter manner. You're just doing a mile round today, basically. In cricket, you have trial ball. Okay? Everyone, don't worry, but it is not, but whatever I'm going to teach today is not trial, it is there in the exam. Okay? Let's start. We'll be starting a chapter called company audit. Now, a little bit about this chapter. This chapter is in the earlier course, no, in the old portion. This chapter was there in the law portion as well as audit portion. Both the portions was there. Normally, traditionally, the audit faculty teaches this chapter, but ICA has put this chapter in the law, because this is what we're going to do, section number 139 to 140. Now, this company audit chapter, which is there, please pay attention here, please pay attention. Company audit chapter, which is there, this chapter is actually there in the law syllabus, but always audit faculty will teach us, because here only I'll get the chance to explain who is an auditor, when can they get appointed. All these things are there in these provisions of the Companies Act. So when your law faculty comes and teaches you, it will be more of a revision. So you learn mainly this in audit, and when the law faculty comes, he'll also cover it, because it is his subject. So he'll be worried about the marks in this chapter. So I'll ensure that is so strong that law faculty also find this comfortable, that he gets a confidence that, okay, my students know the company audit law properly. Okay, so that has to be done from my side. We are going to do first 3 days. I think I put the message in the group. First 3 days we are going to invest in company audit and Caro, and then we'll take with the core audit portion. We'll go one by one. Okay. So now let's start with our journey. Let's start one by one. Let's go here. My first question to you all is this: What do you mean by books of accounts, and what is financial statements? I'm not asking some difficult question at the beginning. Sunday morning, I want to start on a difficult note. Tell me, what do you mean by books of accounts? What do you mean by financial statements? First of all, are they the same? No. Then what is the difference? Has to be some difference, no? Tell me what is the difference. Raise your hands. Achha, in our class, no, don't worry about doubts and all. You can raise your hands whenever you want. Ask doubts, no problem. But we open in the class. Okay, express. Tell me, what is the difference between books of accounts and financial statement? Please tell me. Difference between books of accounts and financial statements. Can anybody tell me? Expenses and payments. Expenses and payments are same. No. Tell me more. Anyway, what do you mean by books of accounts? Simple question I'm asking. Books of account. You have learned this since 11th standard. No, what is books of account? What is financial statement? So tell me, I'm just asking a simple question. What is books of accounts? Raise your hands openly and don't get scared and all. It's okay. You have to become C. Very nice. It's easy to read and say. I'm asking what is it? I'm not asking for a definition. All these things I'll teach you, no problem. I'm asking about what is books of account. Very simple question. Like a record of all the day-to-day transaction. Can you explain what are day-to-day transaction for any business? For Yash's Academy, what is day-to-day transaction? Money received. First thing you think about money received. Coaching classes, money received only. Yeah, you're right, but your fees received, student admission is the first transaction, it's the main transaction for the organization. Zoom में कैमरा नहीं है. Correct. कर दिया मैंने, चालू अभी. Thank you. You're right, day-to-day transaction, true. So in Yash's Academy, you have the fees collected from the students. Is the day-to-day transaction. Students keep on taking admission for batch after batch. Another thing will be at the end of every month, sir will be paying the rent of this place. Maybe. It is possible that sir will be paying the salary of the staff, or maybe 100% paying the salary of the staff. Paying the professors on time. All these things becomes part of the Yash's Academy everyday transaction. Suppose you are running a restaurant. You are running a restaurant, and what are your day-to-day transactions? purchase of raw material. Correct? No, first we'll purchase tomatoes, potatoes, all these things. Tomato, which is price of gold right now, but you still purchase it. Tell me, so you'll purchase all these things. And with that, you will make sandwich and all these things, whatever the customer wants. They want masala dosa, they want sandwich, they want frankie, whatever they want, you will give them. The customer will pay you the amount. So the day-to-day transaction for the organization becomes in relation to the purchase and sales. Purchase and sales. To maintain a record of it. Example, I am running a restaurant. Now, what is your name? Sanjana. Sanjana, please don't talk at the back. Please don't talk at the back. Please don't talk. You'll come in front very, very soon. Please don't talk. Okay, see. Sanjana is here. Sanjana comes to the restaurant and she orders for masala dosa. Now, after she eats, she'll make me the payment. She'll make me the payment. So I get the payment. I will give her a bill. I'll give her a bill. The copy of the bill that I've given her, one copy will be there with me only, and that copy we'll call it as counterfoil. We'll call it as what? Counterfoil. Whenever somebody makes you a payment, gives you gives you cash or UPI transfer or check, whatever they give you, you acknowledge that by giving a bill, and a copy of the bill you keep with yourself. The copy that you have with yourself is called counterfoil. It is called as what? Counterfoil. So in the restaurant, every day somebody will purchase, some sales will happen, we'll purchase raw material, we'll do the selling. At the end of the month, we'll pay the rents of the restaurant. At the end of the month, I'll pay salary to the waiter, I'll pay salary to the restaurant manager, to them I'll pay salaries. So you understand this day-to-day transaction that happens, as she said, day-to-day transaction, that is my books of. That is my books of. So first April, around 150 orders came. I made different food items. I collected them. And first April. Second April, around 175 orders came. Third April, around 160 orders came. Fourth April, some more orders came. Fifth April, some more orders came. Like that from the first day of the year till the last day of the year, whatever my restaurant is selling, whatever my restaurant is purchasing every month, and whatever salary I'm paying, rent I'm paying, everything, whatever advertisement I'm doing, whatever printing and stationery expenses are there, all that part becomes my books of accounts. Every day transaction becomes my books of accounts. That's the organization has to maintain. Every business organization in India has to maintain books of accounts. Now, one question, sir. In your restaurant, let's say, what is the name? Sachin. Sachin is my investor. Sachin has 20% shares in my restaurant. Now, if Sachin has 20% shares in my restaurant, now think about it. And he tells me at the end of the year, Kartik sir, I've invested 20% in your restaurant. Sir, I want to know whether we are profitable or not. Please, can you provide me the total sales figure I want, sir? How much sales are we doing? Is it increasing or not? I want to check that. I say, Sachin, sure, no problem. What I do is I call a lorry. A lorry comes. What I do is I take all the bills. First April, masala dosa, your this dosa, that, or whatever sales I've done, full bill, 1st April, 2nd April, 3rd April. 1st April to 31st March, whatever sales bills I've created, whatever customer bills were there, remember that counterfoil, I have the copy. So I put that in the lorry and tell the lorry person, go to Sachin's house. I call Sachin and tell Sachin, outside your house, there is a lorry waiting. You wanted all the sales, no? Tell you and your family members, please remove all that bills from the lorry. Keep it in your house and take a calculator and please calculate all the bills. Total sales you will get. Total sales you will get. Sir, I touched Sachin on the phone. Sir, that is okay. Sir, I also needed the expenses also. That's Sachin, okay, no problem. I call one more lorry. Put all the expenses in that, all the invoice of expenses in that, send the lorry again to Sachin's house. There's Sachin, all the expenses you need, P&L, debit side, entire thing, all the expenses that are there with you. All the bills are there. You can calculate yourself. This is one investor. How many investors? One. Reliance has 32 lakh investors. How many lakh investors? Can Mukesh Ambani send 32 lakh lorries? So you understand? No. So you understand that, sir, maintaining the day-to-day records for our business, that is books of accounts. But that is not how you will present the information. That is not how you will give the information to the shareholders or to anyone seeking. Government calls one of the company and says, we want to check your records. Can the company send lorry to Delhi with all the bills and everything? No, because that is not how you present. That is not how you present. So how do you present? You present your details regarding your business using financial statement. Using what? Financial statements. All your income on the credit side, all the expense on the debit side. You show your profit and loss account. If the debit balance is there, profit. Credit balance is there, loss. All whatever the company, the asset it owns on the asset side, whatever we owe, that is called liability. Whatever you own, asset side, whatever we owe, liability side. So we make our balance sheet and give that. So we have profit and loss account and balance sheet, profit and loss account and balance sheet. Like that, we make different financial statements and give it to the shareholders so that it is easy for them to go through. It is easy for them to go. Keep your basics strong. Go for it first of all. First, you are looking at books of accounts. Go to the left hand side area and make you write all these things. Don't worry about the notes. We'll do it. There it is written as per 2 clause 13 in the Companies Act. No, books of accounts is defined in 2 clause 13. Remember this. Okay? Whatever number comes, though, we'll be doing a lot of sections and clauses and all these things will come. You have to always keep confidence that no, I have to learn this properly. Don't be in the habit of skipping sections. In CA internal, last time passing percentage was 10%. So 10% basically means out of 100, 10 are clearing. That is a basic calculation how it works. So 10 are doing something right. Aren't the other 90 also studying? They are also studying. But what are the 10 doing extra? They are doing something that is the X factor. They are ensuring that is done properly. And that is not skipping the section numbers, clause numbers, and not taking that shortcut. So what we have to ensure is that in our class also, whenever we do something, always with the section number, clause number, we have to keep revising. And I'm promising you after 3 days, we'll have a discussion. And I'm telling you that Companies Act, all the section numbers, the RO, all the clause numbers will be there in your mind. The road also, if I ask you, tell me clause 20, we want to tell you. Okay? Promise. But put the effort if you tell me this. As per 2 clause 13, they have given. As per 2 clause 13, books of accounts is a record of. Tell you, books of accounts is a record of. You have to remember a code called. Mr. Spelling. Mr. Spelling. What is Mr. Spelling? Very simple. First is MR. Money received and expended. See, money received and expended. SP. Sales and purchases. Sales and purchases. Assets and liabilities. Assets and liabilities. Finally, items of cost. Items of cost. Go for it once again. Now, your books of account is defined in 2 clause 13. 2 clause 13. It is a record. It is a record. Today you maintain a record of what? You maintain a record of Mr. Spelling. Whatever money you received and expended. Money received and expended. Money received and expended. Sales and purchases. Assets and liabilities. Items of cost. Once again, money received and expended. Sales and purchases. Assets and liabilities. Items of cost. This remote is made in some factory. This USB to USB connector is made in some factory. There will be some cost associated with this. Some cost will be there. So to maintain the details of cost, how much material cost we use for making this, how much labor cost we use for making this, how much overheads, electricity and all we use for making this. The total that cost, that is the remote cost, one remote cost. That's called items of cost. Simple. Tell me, what is books of account? Books of account is a defined in 2 clause 13. It is a record. Tell me. Money received and expended. Sales and purchases. Assets and liabilities. Items of cost. That is books of accounts. Simple. What is financial statement, sir? What we show. See, books of account is what you are. Tell me, books of account is what we are. And financial statement is what we show. Tell me, books of account is what we are. Financial statement is what you show. Books of account is you in your house. Financial statement is you on Instagram. Financial statement is what you show. So when what you are, you show what you are. Whatever you are, if you show that. No, we say it is true and fair you. We say it is what? True and fair you. So the financial statement, let's discuss that for see. As per 2 clause 40. Financial statement is now in this I'll go a little bit more in depth. Okay. Financial statement is first of all your whatever you own and whatever you owe. That is called assets is what you own, liability is what you owe. Profit and loss account. Your income minus expense, whatever you get, is your profit or loss. That is the profit and loss account statement. Your transactions for the year. Now you will understand there's a problem with balance sheet and profit and loss account. The problem is that you make this on accrual basis. You make this on what basis? What is the problem with accrual basis? Please tell me. What is the problem with accrual basis? Is it a good method? Yes, sir. We do in accounting. Of course, it has to be good. Otherwise, why will you do? So tell me, in accrual basis, if for the month of Feb and March, you're my employee, I'm not paying you salary. But my profit and loss account for the year ended, will it include the salary of Feb and March also? Why it will include? Outstanding, sir. Even if it is outstanding, will include in the profit and loss account statement. Yes or no? So you tell me, you will understand that I have not made the payment to you. I have not made the payment for Feb and March to you. But still in the profit and loss account, it is appearing. It means if you only follow accrual system of accounting, you will never come to know how much cash you have. You will never come to know the exact cash position. You will never come to know. Because even if you have not paid, you're recording. Even if you have not received or if you are expected to receive it, you're recording. Now, if you keep recording in this manner, you will understand. You will never come to know about your cash position. You will never come to know about your cash position in your accrual system of accounting. That is why there is a requirement for making one more statement. And that is called cash flow statement. That is called as what? Cash flow statement here. Cash flow statements. Now, what about, sir? In this, we have to explain something. To explain that, you have something called as explanatory notes. You have something called as explanatory notes. I am following some other different method of depreciation. I'll give you a nice story. When I was a CA final, I see very tricky for people. Very tough. Sometimes they will ask a paper in such a manner that students also wonder whether they got the exam, where they got the paper from. This happened. November 2013 CA final exam. Question number 1B. Okay. That November 13 exam was one of the toughest attempts of NCI for accounts paper. CA final, there is a paper called FR, financial reporting. I'm going to give you an example, think, and I'll connect with this later. Look here. In that FR paper, question number 1B was there, and I was reading the paper in the examination. It was an attempt in which I gave. So I'm reading the question in the examination. And the question read, so and so machinery is there, and the machinery was purchased 3 years back, calculated depreciation. I'm like, huh? What people said CFL is tough and all. They are asking stupid depreciation questions. Okay, now CFL question number 1B, that to compulsory question for 5 marks. Depreciation question somebody else. I'm wondering in the exam, what is this question? I kept reading. Last line, calculate depreciation. So I laughed, depreciation. Then they said further, as per product unit linked value method. I'm wondering what is this? I know SLM. I know WDV. What is product unit linked value method? No idea. So I dropped my pen and I wonder what is this method about? I was looking around. My friends, a few of my friends were also there in the same exam hall, and they're also looking at each other. We are also looking at each other. What is this paper? They asked one of the toughest papers in ICI history. One of the professors at that time, he said that it took him 7 hours to solve that paper. Where, yeah, on YouTube there's a video. He only admits that it took 7 hours for me to solve this paper. Very tough paper. God knows from where they ask the questions. And a lot of the questions you have to apply your mind to a great level because it was not direct question. Not something that you must have practiced and similar question has come and you can easily write it. Not like that. Completely different. You have to use your brain. One of my friends in that, his name is Pranav Kanoria. Pranav Kanoria is my dear friend in Mumbai. That guy, he scored some 67 marks in that paper. 67 marks in that paper. In that attempt, the ICL passing result was 3%. How much percent? 3. CA final percent was 3%. Mumbai passing result, Mumbai zone passing result was 0.8625%. How much? 0.8625%. It means out of 100, not even 1% is clearing. Just about 3/4 are clearing. I hope you understand. 0.8625% was the passing percentage. 13 students cleared both groups in Mumbai. Only how many students across Mumbai? 13 students. One of that friend was my friend, Pranav Kanoria, who got 67. I called Pranav. I said, Pranav, I need your photo. He said, why? I said, near that, Bhagwan, Mary ki photos, no? I want to give your photo also, just to pray. How did you score this one? Like, no, just like, I don't know how it happened. What I want to tell you is, sometimes the companies go for some different method. So instead of following WDV SLM, they can follow some different method. But normally shareholders are expecting that in the balance sheet, machinery, if it is calculated, it will calculate as per WDV or SLM only. Now, if you're calculating using a different method, you have to give all the explanations in something called as an explanatory note. Explanatory notes. That is basically your notes to account, notes to accounts. And last but not the least, you have last one that is called, it's not written here, I'll just write it. Statement of changes in equity. Statement of changes in equity. Whenever a major shareholder sells the shares, that percentage will, how much shares have been sold, that matter will come here, statement of changes in equity. You understand this? Okay. 5 things from your financial statement. I want you to tell it with me. 5 things are what? So look here, 2 clause 40. 2 clause 40 defines financial statements. Tell me the 5 things. Go in a very easy manner. First is what? Balance sheet. Second, profit and loss account. Third, cash flow statement. Fourth, explanatory notes. And fifth one, statement of changes in equity. Statement of changes in equity. Now tell me both. What is books of account? What is financial statement? Tell me both. Tell me. Books of account is a record of money received and expended, sales and purchases, assets and liabilities, items of cost. Very simple. Financial statement is defined in 2 clause 40. Tell you this 5 things. First is what? Balance sheet. Second, profit and loss account. Third, cash flow statement. Fourth, explanatory notes. And finally, statement of changes in equity. Statement of changes in equity. Now, sir, You are forgetting something. Your audit professor. Why are you teaching us accounts? Why? Because I'll tell you now. The company, what it is, I'm writing here what it is, and company, what it shows to the shareholders, no, that should be in agreement. That should be in agreement. My sales bills of the restaurant, total sales throughout the year from first of April to 31st of March, let's say comes to 5 crore rupees. 5 crore rupees. But what I'm showing is 7 crore rupees. Sachin is an investor in my restaurant. I know that if I tell him that my sales is just 5 crores, he will tell Kartik sir, please give my investment back. I need my money back. Enough. I don't want to invest in your company. I'll sell my shares. I have 20% shares in your restaurant. I'll sell it to someone else. He will tell that. I know that he will not be impressed with my company's performance. So what I tell my accounting department is I tell one of my accounting person. What is your name? Shalini. I'll call Shalini. Shalini, please come here. Shalini, one request. Currently, our sales, no, we are showing as 5 crores. But our investors will not be happy with this. Shalini, can you please increase the sales? So Shalini, when she increases the sales, no, tell me, think about profit and loss account. Think. Profit and loss account credit side. If the sales increases, tell me, will the profit increase or decrease? Profit increase or decrease? Increase. Profit will increase, correct? No. If sales are increased on the credit side, on the debit side balance, the profit will increase. And that is what I want to show Sachin, because I want to impress my investor. Otherwise he'll leave his investment. The shareholder will leave my company. Now, I don't want that to happen. So what I'll do is, I will do something called, look here, this is my position of 5 crore. This is my position of 5 crore. I want all your hands to be like this. Please make it like this. Do a lot of hand action. Tell me, this is your 5 crore. This is your 5 crore. You are showing 7 crores. You are showing. Tell me, with this, your profit is increasing or decreasing? Profit is increasing. You are showing a better position. You are showing a better position. This is you at home. This is you at home. On Instagram, after putting some 25 filters. You are showing a better position. You are showing a better position. Now, this is called window dressing. This is called as what? Window dressing. You are doing window dressing. You are window dressing so that the shareholders are impressed. Now, when you do this, boys and girls, what you are doing is you are manipulating the accounts so that the shareholders are impressed in the wrong way. In reality, my sales are only 5 crores, but I'm showing a wrong position just to impress the shareholder, cheating the shareholder. And a window dressing. If I do that, in that case, the auditor will say the company is not giving a true and fair view. Company is not giving a. When the books of accounts and financial statements are shown at the same line, same level, we say that the company is giving a true and fair view. But when you are showing a better position, you are doing what? Window dressing. This is clearly window dressing. Second, imagine profit and loss account. Okay. Whatever my profit is there, not profit and loss account debit side, whatever my profit is there, I have to pay tax on it. I have to pay tax. So my profit is coming to 1 crore. Sales is 5 crores. Profit is coming to 1 crore. Profit is coming to 1 crore. On 1 crore, I pay 30% tax. So it comes to 30 lakhs. It is paining my heart so much. Oh my God. 30% tax? 1 crore, I have heard 30% to the government. Again, Shalini, please. Shalini, now what? Shalini, last year we did that window dressing. This year we have to do opposite. What we have to do? We have to do secret reserve. We have to do secret reserve. Shalini will say, what is the new terms you come up with? Shalini, look here. We are paying 30 lakhs as for the current profit. I want to show lower profit. Shalini will ask, sir, how to do that? Then Shalini, do one. Burn some sales bonuses. Some Masala people must have eaten. Frankie people must have eaten. This thing, sandwich people must have eaten. Take those sales bills and just burn it. That doesn't exist only. So as if it doesn't exist only. You just burn it. Shalini said, okay, sir, fine. Shalini goes and burns it. And now with this, my sales is declining to from 5 crores, we are showing it at 4 crores. How much? 4 crores. Tell me, if my sales is 5 crore, my profit is 1 crore. Tell me, sales is 5 crore, profit is 1 crore. If I reduce my sales by 1 crore, reduce my sales to by 1 crore, my profit will be 0. Profit will be 0. What will be 0? Sales 5 crores, profit was 1 crore. Sales reduced to 4 crores. So now credits are reduced by 1 crore. So your profit will be 0. Balance will be 0. Yes or no? Are you there with me? Yes or no? Profit will be 0. Now on that, tell me 0 into 30%. No tax given to the government. No tax given to the government. Now here what I did, I knew that if I show higher profits, I have to pay tax to the government. So I'm showing a worse position. I'm showing a worse position. Worse position. This is called as secret reserve. This is called as secret reserve. So do this. Look here, everyone. Keep your left hand like this. Whenever you show a better position, whenever you show a, it's called window dressing. It's called window dressing. Whenever you show a worse position, whenever you show a worse position, there is books of account, books of account. Whenever you show a worse position in the finance statement, in the finance statement, that is called as secret reserve. That is called as secret reserve. Whenever you are doing this, you are manipulating the accounts. You are manipulating the accounts. Accounts. Now, who will check all these things? That is you guys in the future. That is auditors. So statutory auditor checks this only whether books of accounts and fire statements give a true and fair view. There should not be any window dressing. There should not be any secret reserve. There should not be any window dressing. There should not be any secret reserve. There should not be any secret reserve. If I do that, then that is called as the manipulation in accounts, and the auditor is there to check that only whether window dressing and secret reserve is there or not. Are you there with me? Yes or no? One more thing. We'll be learning about some auditors now. In that, no, the main content of the auditors that is given in our portion is called as statutory auditor. That is what we are going to study mainly. Statutory auditor is not emotionally connected with the company. He doesn't care about the company's well-being. He doesn't care. His only job is to see whatever the company is, whether we are showing the right kind of picture or not. That is what the auditor is saying. If the company is highly profit making, auditor is telling the company, you show no, you're highly profit making. Why are you worried about more taxes? You show highly profit making, no problem. If your company is in a so-so kind of a situation, some profit they have earned, then show you have earned some profit. If the company is into no profit, no loss position, then show no profit, no loss position. If the company is into losses, then show you're into losses. But whatever it is, you be true and fair in your financial statements. So whatever you are, just show it. And if you are doing that, till that time the statutory auditor has no problem at all. No problem at all. But if you start doing this or this, what I'm dancing, tell me what is this? Window dressing or secret reserve? Then the auditor has problem. Then the auditor has problem. Auditor is there to check one thing. You have to tell me two lines. Tell me, books of accounts should be in agreement with the financial statement. Books of accounts should be in agreement with the financial statement. Auditor considered one more thing, whether financial statements give a true and fair view of the state of the affairs of the company. Tell me, financial statement, whether they give a true and fair view of the state of the affairs of the company. Tell me these two lines. First line is what? Books of accounts and financial statements should be in agreement. Financial statements should give a true and fair view of the state of the affairs of the company. I want you all to take your notes and give the heading there called Basics of Auditing. The heading will company audit only. You can heading no problem. The basics of auditing. Write the basics of auditing. And just write in a relaxation. Write the books of accounts. Books of accounts. In bracket, write that defined in 2 clause 30. Defined in 2 clause 30. Books of accounts defined in 2 clause 30. Okay, below that, just copy that area. See, books of accounts is a record of. Just copy that area. Copy that area. Please copy that area. Books of accounts is a record of. Copy the area on the left hand side, please. Done. Tell me, books of accounts is a record of what? Tell me, first is what? Mr. Spallick is the code. Mr. Spallick. Tell me, money received and expended. Money received and sales and purchases. Sales and purchases. Assets and liabilities. Items of cost. Very simple. Next, below that, please write there. As per 2 clause 40, financial statement is as per 2 clause 40. Financial statement is. First, tell the answer with me, then you please write. Tell me 5 things in financial statement. First is what? Balance sheet, profit and loss account, cash flow statement, explanatory note, and statement of changes in equity. Please write that. The last point is the statement of changes in equity. Statement of changes in equity. It's all there on the screen. Please write that last point. Statement of changes in equity. Yeah, Sybil. Okay. We'll invest a lot of time in basics. Okay, don't worry. Can you proceed? Now let's go to this area. Everybody see here. Now, what are you concerned in this chapter or in our entire audit portion? Tell me, who are the owners of the company? Shareholders. Fine. If a company is there, I have a question for you. If you have invested your money, your hard-earned money into the company, do you have the right to know the company, how much salary they are paying to their employees? Do you have the right to know the cost of raw materials? Do you have the right to know the day-to-day sales? Yes or no? Yes. Okay, fine. So I have a question. Suppose you purchase the shares of Vodafone Idea. You purchase the shares of Vodafone Idea. I have a question for you. Can you go to the nearby Vodafone store, any Vodafone store, and enter the store? And can you tell that person, can you please tell me how many SIM cards you have sold today? Because I want to know. Will ask, it is none of your business. Why do you want to know? So you open your Demat account on your phone, your app on your phone, and show. See, I'm holding 25 shares of Vodafone. I'm holding 25 shares of Vodafone. That is what you say. And then you tell him that shareholders are the owners of the company. So owner has come here. So I want to know the detail. I want to know the detail. How much SIM card have you sold today? Tell me, does he will he have to show you the details of how much SIM cards they have sold? No. Rejecting the owner. Can you throw him out of the job? Can you throw him out of the job? Why not? You're the owner, no? Owner cannot throw employee out of the job. This is more safer than government employing also. Tell me. Tell me, my question is, you understand my question? If you are the shareholder, you're owner, no? If you're owner, then can you go to the store and can you ask for the details of SIM card sold by Vodafone? Leave him SIM card. Can you ask that employee what is your salary? You can ask. Will he reply? My question is, why not? You're the owner, no? You are the owner, no? Then why can't you ask how much salary he's getting? No, but I'm owner, no? You only told, no, as you are the owner of the company, you only told shareholders. I didn't tell, you told. Tell me, you have been taught the shareholders are the owners. So if you go to any nearby store and if you ask for some detail, Vodafone store, if you go and you show them that you are holding Vodafone shares, do they have to give you the data? Yes or no? Simple question. No. Why not? Why not? Because shareholders don't get access to books of accounts. Shareholders don't get access to. Then employee will tell, sir, respectfully, please check section number 129 of the Companies Act. You will get access to the financial statements, sir. You will get full access to financial statements, sir. You will get profit and loss account, balance sheet, cash flow statement, explanatory notes, statement of changes in equity. All these things that you will get. All these 5 things you will get. But, sir, all the invoice of sales, all the salary slips of the staff, all these things, sir, you don't have the access to that. You will get the total sales figure, sir. You will get a total salary figure, total of all the employees. That you take it from the company. But sir, you will not get the individual breakup of it. You will not get the individual breakup. How much one employee was paid, how much this employee was paid, how much sales were done in this branch or this office on this day. All these details shareholders don't get. In finance statements, when you make profit and loss account, tell me on the credit side, P&L credit side, do you write total sales figure or do you write sales? Branch 1 day 1, branch 1 day 2, branch 1 day 3, branch 1 day 4, branch 1 day 65 day, then branch 2 day 1, branch 2 day 2. Do you like that? The answer is no. You give the total sales figure. You give the total sales figure. That is what the shareholders deserve. They don't deserve the individual breakup. So then, sir, shareholders have put their money and they don't even know the individual breakup. So then their money isn't it at risk? 100% at risk. The risk is there. For that, the shareholders meet on one fine day, and that day is called as the AGM. Day is called as the AGM. On the AGM day, shareholders take two very important decisions. First is to appoint the directors of the company who will manage the company. Because the directors manage the company, they are called as the management. They are called as the management. Management. Now, you can get good management, you can get bad management. Mukesh Ambani ji, Narayan Murthy ji, Ratan Tata ji, Azim Premji ji, all these persons are reputed persons. They are excellent for their management skills. They are known for their management skills. They have been top chairpersons and heads of the companies. Now, if you get such a kind of management, then great. But you can also get management like Vijay Mallya. You can get Nirav Modi. You can get Anil Ambani also got the company into debt. So you understand here, when you get a management like that, the shareholders will be worried. So for that, the shareholders do one more thing in the AGM to be on a safer side. They appoint you as auditor. And that is, in the AGM, the shareholders appoint one more important person called as the statutory auditor. Statutory auditor. That is you. Now, what you have to do is you have to check whether the management is running the company properly or not. You have to check this whether management is running the company properly or not. And then you have to report to the shareholders in the next AGM. So you're appointed in one AGM, you have to report to the shareholders in the next AGM. Repeat after me, you're appointed in one AGM, you have to report to the shareholders in the next AGM. Next AGM. Regarding how the company has performed. That is what the statutory auditor do. Statutory auditor has to be a CA. Has to be a CA. Compulsory. No other degree if you are having, you will get this kind of privilege. If a person has some 10 degrees, MBA, CS, CMA, this thing, that thing, everything, not CA. He says, I have tremendous financial knowledge. True, you may be having, agreed. But you cannot be shadow auditor. You cannot be shadow auditor. A person has one degree. CA. Can that person be shadow auditor? The answer is yes. Now, when the person, so many students message me, sir, is the CA course at risk? What will happen about our future? Portion is changing. Article only 2 years. Will we have less experience? Is it good thing, bad thing? I said till this law is there. No, till this law is there. Statutory auditor can only be a C. We are safe. We are safe. When this law changes, then there will be a lot of changes that will happen. But till this law is there, no problem for us. Because till the companies are there, companies will make the accounts. And till the account making is there, account checking will be required. And account checking power is given to who? Statutory auditors. Statutory auditor can be who? Only a CA. So till the companies are there, CAs will be there. CA course value will be there. Till this rule is there. So till this rule is not disturbed, we are good. Okay. Next. Statutory auditor cannot be an employee of the company. Statutory auditor cannot be an employee of the company. Even if an employee is a top class CA, still he cannot do statutory audit. On that, we'll see in some time. I want to teach you the law. In that, I'll teach you how it goes. Okay. Tell me till now here, then you go ahead. Tell me, who are the owners of the company? Shareholders. Shareholders meet on one fine day. What is that day called? AGM. In the AGM, they first take the important decision to appoint the people who will run the company. Directors. Directors. They manage the company. Directors appoint as the top management. The shareholders also appoint one more person to check whether directors are doing the work properly or not. Who is that person? Statutory auditor. Statutory auditor has to be a, can never be an employer. Has to be a CA, can never be an employer. Statutory auditor is appointed in one AGM. You have to report the shareholders in the next AGM. Are you there with me, sir? How the statutory auditor reports to the shareholders? Like that. You have the management also will be concerned. See, 99.99% of the management in the company are having very good what do you call intention. You will get very rare case of fraud. See, we glorify fraud a lot in India. We say fraud happened. Oh my God, this big has happened. Think about year on year, lakhs and lakhs of companies are there in India, and they are running so much properly, so much with care, and there is no fraud in that company. 99.99% cases, you will say management is working properly only. Management's pure intention is to ensure that the company is structured and running well. Example. Reliance Industries Limited has 2.4 lakh employees. How many employees are there? 2.4 lakh employees. How many shareholders? I told you 32 lakh shareholders. How many employees are working in Reliance? 2.4 lakh. Every month the employees are paid salary. Every month the employees are paid salary. Do you think they will be randomly paying salary or they will have some system in place? Some system will be there. Some proper step-by-step system will be there. That is called your policy and procedures in relation to salary. Regarding their export sales, they'll be having some system in place. some system in place. That is called policy and procedures regarding export sales. Regarding import of raw materials, they'll be having some procedure in place. Regarding every item, how to pay the electricity bill, they'll be having some procedure in place. How to put for advertisement, how to approve the advertising budget, they'll be having some procedure in place. For each and every activity in Reliance, they'll be having some procedure in place. Not only Reliance, any big company, they'll be having some procedure in place. Infosys provides IT solutions. Infosys. Now, any company that approaches Infosys and tells this is a problem, we want an IT solution. Can you provide us a solution? Now, Infosys will have a procedure how to approach the client, how to know the details of the client, how to ensure that you are providing a top class system. They'll be having a procedure for that. So every company that works will have a procedure, step by step, step 1, step 2, step 3, step 4. Will have a procedure for each and every activity. You cannot work otherwise in such a big organization. Now that step by step procedure, no, somebody has to check. And who is openly able to tell the director, see, in your system, oh, this is a loophole. See, in your system, no, there is a problem. Somebody has to check. Suppose you are studying at home. And you appoint a person, and the person is just, you're studying, the person is just sitting like this. And seeing how you're studying. How much time you get up from the seat. How much time you watch your phone. How much time you're while studying, you're putting like this and you're sleeping. A person is there to check that. And then after 10 days of observing, that person says, see, you sat for around 6 hours to study, but you actually studied only for 3.5 hours. Other 2.5 hours, 45 minutes went in your phone. Some 20 or 25 minutes went in taking a nap. So your effective studies was only 3.5 hours. Don't think that you have studied for 6 hours. There should be someone to tell you the loophole where your procedure is lacking. Your procedure is lacking. Now that person for the directors is called internal auditor. It is called what? Internal auditor. Any one of you who wants to start a business, no, I always give a recommendation that if in articleship, if you get internal auditing work, 100% take it. Because when you take internal auditing, and that too for a big company, you get the experience of knowing the procedures of the company. So you come to know about the loopholes that are there in that. So whenever you start your own business later on, you'll come to know what mistakes not to do. What mistakes not to do. So look here, see, your internal auditor is here, internal auditor. Internal auditor is appointed by the directors. Because the directors are appointing it, the internal auditor will not report to the shareholders. He'll report to the directors only. Tell me, statutory auditor is appointed by the shareholders. So he's reporting to the shareholders. Internal auditor is appointed by the directors. So he's reporting to the. So I am working on January. Some random person is there next to me. I says, you don't look from Bangalore. I said, no, I'm from Mumbai. Like, oh, where are you working? I said, no, I'm working here. She's like, Academy, I teach there. Audit and no, I teach there. They're like, okay, fine. Then they'll ask me, how's the batch going on? So I said, none of your business. Why do you care? How many girls are there in the boys? How many boys are there in the boys? Like, what is your business? You're in which chapter right now? Chapter 2 is over. I said, none of your business. Why is it none of your business? Because you have not appointed me. You're not. If sir asks me, Kartik sir, how's the batch going on? Can I say none of your business? I say, of course, sir, batch is going on very well. Good batch is there. Student will clear, so don't worry. I said that only. So you understand here, I will report to the person who is appointed. Internal auditor will report to the directors because he's appointed by the directors. Internal auditor, they have said here, can be a CA or a cost accountant or any other professional. Tell me, he can be a CA, cost accountant, or any other professional. Can it be a CS also then? Yes, it can be any professional you take. That can be a internal auditor. Internal auditor, they have said, may or may not be an employee of the company. It is not compulsory that he is a non-employee or an employee. He may be an employee, may not be an employee. May be an employee, may not be. Very clear, tell you. Simple. Go for it. Tell me, who are the owners of the company? They have to meet on one fine day. That is called as the AGM. They take the decision to manage the company. They also take the decision to check the directors are working properly or not. Who is it? Statutory auditor. Statutory auditor will report to the shareholders in the next day. Correct. The statutory auditors must be a CA, cannot be an employee. The directors for the company's own improvement to point the loopholes in the company's system. They appoint internal auditor can be a CA or a cost accountant or any other profession. But he may or may not be an employee. He may or may not be an employee. Easy to understand this area? Comfortable? That is basically this area. I want to quickly copy it. Give the heading the statutory auditor and internal auditor. Give the heading the statutory auditor and internal auditor. Please give the heading there, statutory auditor and internal auditor. Can be done. Hey, books of account defined into clause 13. Books of account is the record of what money received and expenses, sales and purchases, assets and liabilities, items of balance sheet is defined into clause 14. Tell me 5 things. Balance sheet, profit and loss account, cash flow statement, explanatory notes, statement of changes in equity. Simple. Can you proceed ahead? Now let's see. Please see here now. We are now doing the section flow of this chapter. Now we start with company audit core part. Okay. Now, first of all, in your mind, sections should be properly there in your mind. Always, always, always. Sections, if possible, is subsection number, clause numbers, if it is there. Great. Everything is a step-by-step procedure. When you look at all the sections in the Companies Act, sometimes you get overwhelmed. Oh my God, so much. It's not like that. Easily, it can be done. Law, large batch. We created a large day, 7 minutes video. Around 6 minutes, 48 seconds, some 7 minutes video was there. Section number 1 to section number 148, start to end. Start to end, students only did. Section number 1, 2, 3, 4, like that. One by one, all the sections. And that much control you should have in sections. Only then you will have fun writing the law paper, because then you will be able to quote the matters. Why I'm telling that is because this is also part of law only. So you should know the section numbers properly. Okay. Everyone please see here, understand it. We look here, see. First is section number 141 talks about, look at the screen only, don't write or anything, please here. Section number 141 talks about eligibility, qualification and disqualification of the auditor. Who is eligible, qualified, or who is disqualified to be an auditor is given in section number 141. Now the person who is eligible or qualified, now that person, what you will do is you will appoint him under section number 139. Section number 139 gives you you will tell this as procedure for appointment. Which means 139 is what? Procedure for appointment. So your 141 is eligibility, qualification, disqualification, and 139 is procedure for appointment. Tell me, can the auditor work for free, or should an auditor work for free? No, why not? Why not? He's doing the work of the company, so do it for free, no? So what? Your state answer will be, sir, Sunday morning, 7 o'clock class. We are not coming for just like that only purpose, sir. We are coming with a clear intention of becoming CAs and earning well in life. And earning well in life. If after doing all this effort also, if I have to provide everything for free, sir, then what is the use in life? What is the use in life? So that is what your answer should be. Very proudly, we should say, I will provide quality, but I'll charge fees also. I'll provide quality, I'll charge Fees also, right way to go. So look here, you understand here 139 is nothing but in relation to procedure for appointment. Whenever the auditor is appointed, auditor will charge remuneration. Remuneration is section number 142. Remuneration is section number 142. Remuneration, section number 142. Tell me, is the auditor paid just for like that only or for doing some work? Doing some work. So the powers and duties of auditor is covered in 143. Powers and duties of auditor is covered in 143. Then you have one more area where, see, they have written services the auditor cannot provide. Basically, services the auditor cannot provide. This is called as a prohibition list. So basically, the list of services that the auditor cannot provide, that is given in 144. Tell me from the beginning, very simple. 141 is about what? Eligibility, qualification, and disqualification. The 139 is what? Procedure for appointment. Then you have 142. Remuneration. 143. Power and duties. But there are some duties the auditor cannot do. That is 144. Services the auditor cannot do. Services the auditor cannot do. Easy to understand this? Okay. Go for it once again. 141 is what? Eligibility, qualification, and disqualification. 139. Procedure for appointment. Then you have 142. Remuneration. 143. Powers and duties. And 144. Services the auditor cannot. Easy to understand this area? Now. Suppose the auditor is appointed in this AGM, auditor is appointed in this AGM, and the auditor is, let's say, appointed for 3 years. Auditor is appointed for, let's say, 3 years. Normally, the auditor is appointed for 5 years. I'm just doing a 3 years example. Suppose the auditor is appointed for 3 years. Then the AGM in which the auditor is appointed, no, the AGM in which the auditor is appointed, that will be called as the first AGM. Reliance Industries Limited, suppose they appoint an auditor this year. The AGM which is conducted this year, no, that is the AGM in which will be appointed. And for the auditor, not for the company, the old company, but for the auditor, it will be the first AGM. It will be the first AGM. Do you understand here? Look here, look here. First AGM to second AGM will be 1 year. Second AGM to third AGM will be 2 years. And third AGM to fourth AGM will be how many years? 3 years. So you understand first AGM to, when I say auditor appointed from first AGM to fourth AGM, it doesn't mean 4 years. It means how many years? 3 years. Now, before every AGM that is there, boys and girls, everyone look here, look here, look here. Important part is coming. Before every AGM, year before every AGM, year before every AGM, year before every AGM, the auditor has one right and one duty before every AGM. So whenever that second AGM is going to come, just before that, that red line which I made, before the third AGM, just that red line, before the fourth AGM, just that red line. The auditor has some right, one right and one duty. What is the auditor's right? Auditors has the right to receive the notice of AGM, receive the notice of the AGM. That is given in section number 146. Section number 140. Right to receive the notice of the AGM. Please repeat after me. Right to receive the notice of the AGM. That is given in 146. So only when you get invitation can you go to the wedding like that only, or you should get invitation also. So that is the invitation. So only when the auditor receives the invitation for the meeting, the auditor can go to the meeting. So he has a right to receive the notice of the meeting so that he can attend the AGM. Yes or no? Second is, auditor has a duty. What is the duty? He has to sign the audit report. Sign the audit report. That is covered in section number 145. That is covered in section number 145. Very simple to understand this. Tell me, just before every AGM, auditor has one right, one right, right to receive the notice of the AGM. And the second is the duty, duty to sign the audit. During the tenure of the auditor, you can see that bracket which I made here, this maroon bracket. During the tenure of the auditor, during those 3 years that the auditor is working, the auditor can be removed or he can leave by himself. That is called removal or resignation. Removal or that is covered in a section called section number 140. Section number 140. Removal or resignation is given in section number 140. Easy to understand this area. Last two sections you have to remember by the words COCO. Remember by the words COCO. What is COCO? Contravention is 147 and cost audit is 148. Cost audit is 148. We will be doing each and every section number in depth. Properly. Okay, tell me. First is what? 141. That is what? Eligibility, qualification, and disqualification. 139. Procedure for appointment. 142. Remuneration. 143. Powers and duties. 144. Service of auditor cannot. Auditor is appointed one AGM. He will be appointed for a certain number of years. Before every AGM in that period, the auditor has one right, one duty. What is one right of the auditor? Right to receive the notice of the meeting. And second, what is one duty of the auditor? Duty to sign the audit. Duty to sign the audit report. During the auditor's tenure, can he be removed? Can he resign also? Yes. Removal means they are throwing you out. And resign means you are leaving. So removal or resignation, can it happen? The answer is yes. That is covered in this section. 1. You don't understand this area? 147. Contravention. 148. Simple to understand this area. Go for it. Tell me. What is 142? 143? 147? Contravention. 39? Procedure for. Procedure for appointment. 146? Right to receive the notice of the meeting. Tell me what is 140? Removal or resignation. 147? Contravention. First audit. 48. 144? Services the auditor cannot. Services the auditor cannot provide. 145. Due to sign the auditor. Due to sign the auditor. Are there anything else? Tell me reverse. 148. Loss. 147. Contravention. 146. Right to receive the notice. 145. Sign the audit report. 144. Services the auditor cannot provide. 143. Powers of the auditor. Powers and duties. 142. 141. Eligibility, qualification and disqualification. 140. Removal or resignation. 139. Procedure for appointment. Are you there with me as well? 142. 147. 145. Sign the audit report. 139. Procedure for appointment. 146. Right to receive notice and to attend them. Today, day one. No. Will come. Don't worry. Okay. Please copy. Please copy this. Give the heading as section flow of company. Section flow of company audit. Automation means if you don't follow these sections, the what penalties will be. Penalties will be given. If possible, provide in this. If you're not joined by this positioning is very important. So when one side of brain should come into the bottom right corner, it will come. The pattern will come. How you remember? Charlie was there in the earlier batch also, early one. For all 3 days will be common. Where we are studying core audit. So bank audit and all we do later in September. At that time, if you guys want to take leave, you can take leave. If you want to attend again, you can attend. For you, was a movie yesterday. Is good. Oh, from Instagram. Of course, I'm Tamil. Kartik Iyer, no Tamil. Yesterday, what happened is I had to come to Bangalore, but my schedule in Mumbai was very busy till yesterday, and my wife also wanted to watch the movie. So we were searching before Bangalore. My flight was there. I had to start at 2 p.m. from Mumbai. So I thought before that I had to catch up the movie. So we searched for the earliest show, which was pretty far away from where I live. We started at 7 o'clock. Dedication, see, 7 o'clock. The earliest show of this jailer movie was at 8 a.m. So went to watch the movie. What a movie! Enjoyed. Full violence. Done till here? Can you proceed? Okay? Sure. Let's start. Tell me, what is 139? Procedure for appointment. 140? Removal or resignation. Tell me 147? Contravention. 142? Remuneration. 143? Hours and duties. 145? You to sign the audit report. 144? Service to auditor cannot provide. 141? Eligibility, qualification, and disqualification. A little bit more time and you will be more into that. Don't worry. Now we are entering, boys and girls, section number 141, first section of this chapter. We start one by one with this area. Okay. Now I want you all to pay attention, look at the screen, and just do it with me in a very simple manner. Please here, understand. We are doing section number 141 here. 141 is about eligibility, qualification, and disqualification of the auditor. Okay. What they said is, even if you're a CA, when can you do auditing work? Okay, if you're a CA, you can do a lot of work. You can do taxation work, you can do GST related tax, indirect tax work, indirect tax work, and GST related work. You can do so many other things as a CA. You can do assurance work. So many things are there. Risk management work you can do. You can work in some company as an employee. But when can you do auditing? So that is specific to this area. When can you do auditing work if you're a CA? So they're saying, first of all, for an individual, it is pretty easy. Individual has to be a CA. Individual has to be a CA. They have said if you're a CA in practice, after you become CA, you have to simply fill a form, give it to ICI. ICI will give you something called as COP. COP is called as Certificate of Practice. Certificate of Practice. As soon as you get that, you can start your own practice. Now, this person, can you do auditing work? The answer is yes. So if you are running a proprietorship concern, that is, if you are an individual, you have to only be a CA. You have to only be a CA in practice. Very simple. Second, they have said here, if you're a partnership firm, they have said like this: majority of partners are CAs, should be CAs, and they should be practicing in India, and they should be practicing in. Repeat the requirement. Majority of the partners are CAs, and they should be practicing in India. That's the condition. So let's deep dive into this a little bit. Let's see how it works. Tell me if there are around 11 partners. How many partners are there? 11. Out of which, if I tell you, 7 are CAs and 4 are non-CAs. Can a CA enter into partnership with non-CAs? Also, the answer is yes. In CA final, you will get something called as code of ethics. In that, they have said that a CA can partner with any CS, cost accountant, any advocate, any a person who has an actuarial science, any architect, any engineer, any a person who has masters in business. All these professions you can do your partnership with. You cannot do partnership with a person who is not professional. So basically, if a person is not a professional, you cannot be a partner with that person. Example, one person is simply a BCom graduate. Can you do partnership with that as a CA? The answer is no. They have clearly said no. So that's said in the code of ethics that you can only be partners with professional. You can only be partners with professional. Okay, now look here. Suppose the 7 are CAs here, 4 are other than CA, lawyers are there, cost accountants are there in that 4. Out of this 7, 6 are in India and 1 is out of India. 6 are in India, 1 is out of India. Then the condition was majority of partners are CAs, plus they should be practicing in India. So tell me here which two numbers you should compare for majority purpose? 6 and 11. So you will check this. Partners who are there in India. Tell me, CA partners who are there in India. Those 6 represent CA partners who are there in India. Tell me, out of 11 partners, 7 are CAs, 4 are non-CAs. Out of those 7 CAs who are there, no, 6 are in India and 1 is out of India. 1 is out of India. So what does 6 represent? 6 represents CAs who are partners in India. Tell me, CAs who are partners in. They should form majority. They should form. So you will compare that with 11. You will compare that with 11. Now, whenever you do 6 divided by 11, no, your answer should be greater than 50%. Your answer should be what? Greater than 50%. Tell me, 6 divided by 11. Will it be more than 50%? The answer is yes. Second example. Okay, see. Suppose there are 13 partners. 13 partners. Out of 13, let's say 8 are CAs and 5 are non-CAs. Out of this 8, 5 are in India and 3 are outside India. 5 are in India, 3 are outside India. Tell me, can they do auditing work? No. Why do you say no? Because you're comparing what you're comparing in your mind. 5 divided by 13. Is it forming majority? The answer is no. In that case, this partnership firm of 13 partners, no. Can they do taxation work? Yes. Can they do assurance work? Yes. Can they do GST related filing? The answer is yes. Everything they can do except auditing. Auditing they cannot do. Auditing they cannot do. Are you understanding my point here? Next one. So there is a CA firm with 18 partners. How many partners? 18. Out of 18, if I tell you that 9 are in India, 9 are outside India. Out of this 9, 9 are in India. Sorry, 9 are CAs and the other 9 are non-CAs. And out of this 9 who are CAs, 9 are in India and 0 are out of India. 0 are out of India. Then can they do auditing work? Yes or no? The answer is incorrect. Answer should be no. Why? We will do 9 divided by 30. 9 divided by 30. And look at the condition that I give you. More than 50%. More than exact 50% doesn't give majority. Doesn't give majority. You need more than 50%. You need how much? More than 10 out of 9 divided by 18 will be exactly how much? People. So they cannot do auditing. They cannot do auditing. Are you able to understand what I'm trying to say? Simple. So they say when partnership firm is there, what are they saying in the condition? They are saying in case of partnership firm, majority partners are C's, plus they should be practicing in India. Clear in the mind? Yes or no? Okay. Next. If it is an LLP, limited liability partnership, what condition they are putting? They are saying here that only CA partners are authorized to act as auditors and sign the audit report. Sign the audit. So in LLP, you will never worry about the majority condition. Never you have to worry about the majority condition in LLP. Never. Not required to worry at all. There are 10 partners in LLP. 10 partners in LLP. Only 2 are CAs. How many are CAs? 2. Can they do auditing work? The answer is yes. Just that the auditing work should be done by any one of the CS and signing has to be done by any one of the CS. So they are saying in the case of LLP, you will not check the majority condition. Only you have to ensure that the auditing work that is done, acting as an auditor and signing the audit report has to be done by CA. Has to be done by CA. There is a LLP of 18 partners. In 18 partners, only one is a CA. How many is a CA? One. Can that one CA do auditing work? The answer is yes. They can do auditing. No problem. They can do. But we have to ensure that while doing the auditing work, who is acting as an auditor, that one C, and who is signing the audit report, that one C. Are you there with me? Tell me, in the case of individual, how majority in individual? That person has to be a CA, person has to be a CA, person has to be a CA. In the case of partnership, majority partners are CA, and they should be practicing in India. In the case of LLP, only a CA is authorized to act and sign. Act and sign means act as an auditor and sign the audit report. Act as an auditor and sign the. Are you there with me? Yes or no? So in LLP, you will not check the majority condition. You will not check the. It is not required. Not required. Easy to understand this. How to remember this? This is your. You see here. Subsection number 1. In subsection number 1, you have individual and partnership firm. In subsection number 2, you have LLP. Together, you will remember IPL. IPL, we all remember, no? I'm all RCB fans here. Are you an RCB fan or are there any CSK fans here? No, is there a CSK fan here? See? Now I will go up. 1, 2, 3, 4, 5. Now slowly, Dhoni fans are winning. Sir, we know we are not a majority here, sir. Any Mumbai Indians fans here? I think eating a vada pav and having 5 IPL championship is fine. I think that is fine. No? I think no problem. I think having vada pav and winning 5 times is okay. Okay, no. Rather than being very fit and not winning at all. You will not see a bigger Kohli fan than me. But of course, I am from Mumbai, so I support Mumbai Indians automatically. Okay. But all my cousins are supporting Chennai. Some are supporting Bangalore also because some are die-hard Kohli fans. So they'll go like that. Okay. But of course, IPL brings us together. Tell me this. Or create fight between us. Okay. Tell me. Individual has to be a CA. Individual has to be a. In case of partnership firm, majority of partners should be CAs. I'm practicing in India. In case of LLP, only a CA is authorized to act and sign. Act as an auditor and sign the audit report. Very simple to understand this. IPL. INP in subsection number 1 and L is in subsection number 2. So from now, whenever I ask you 141 subsection number 1, you should tell me individual should be a CA. Partnership firm. Majority should be CA. And that is in India. In case of subsection number 2, LLP. Only a CA is authorized to And sign. Act means what? Act as an auditor. And sign means sign the audit report. Are you there with me, yes or no? All the disqualifications. Who cannot be auditor? Who cannot be an auditor is covered in subsection number 3. 141, subsection number 3. It's a very small area. Very small area. It is basically this area. Okay, this entire area, 141, subsection number 3. Okay. Look here, see. It is so big that today it will not get covered. So everyone look here, see. It is 141 subsection number 3, you will see at the top, read with rule 10. So we have this area, 141 subsection number 3, read with rule 10. What are rules and everything? I'll allow the law faculty of yours to take you in that, because if I enter that area, then it will be wrong. I'll be entering the law area completely. Just for the timing, remember 141 subsection number 3, read with rule 10. Okay? That we do together when we do subsection number 3. For the timing, what I want you all to do is, I want you all to copy this one. Please copy this one. Please copy it fast so that we can continue. Done. Clear? Now, before going ahead, let's do a quick recap of whatever we have done till now, and then we'll enter subsection number 3 properly. Tell me. Books of accounts is what? It is divided into clause 13. It is a record of what? Record of Mr. Spelling. Go for it. Money received and expended, sales and purchases, assets and liabilities, items of cost. Whenever we do revise in the class, no, from every day, whatever revision we do, I will not tell you to tell that answer. It does two things. First of all, auditing as a subject no will make you very, very dull very soon. So in the class, you will realize that after 3.5 hours, you're like, so now whatever you say, sir, you point out and you say it is dark. You say, yeah. That is what will happen after 3.5 hours or something on normal days. So tomorrow you will experience that. One, I'll give you a tip here, and that is ensure that you are participating in the class. Ensure that whenever I'm tell this answer, just pick yourself and say, let me just say this answer. You know, the two things that I told you. First of all, it helps you to build your mood so that 5 hours you are able to sustain properly with proper grasping. And second thing, it helps you to revise. So many of our students say that, sir, 50% of the revision it happens in the class only, sir. So that revision, if it is happening in the class only, then why do you want to waste time at home? So in the class, participate. Okay, tell me. First is your 141. What about 140? Sorry. First is books of accounts. Tell me once again. Books of accounts are the record of what? Money received and expended, sales and purchases, assets and liabilities, items of cost. Balance statement defined into clause 40. Tell me, it includes what? 5 things. Balance sheet, profit and loss account, cash flow statement, statement of changes in equity, and explanatory notes. Explanatory notes and statement of changes in equity. Fine. Now after that we did tell me, who are the owners of the company? So you have to meet on one fine day that is called as AGM timing is 9 to 6. AGM timing is what? Company has to conduct the AGM between 9 to 6. Between 9 to 6. With that, you have to remember section 96. With that, you have to remember section number 96. And I'm telling you the reality also, AGM timing is 9 to 6. With that, you have to remember 96. With that, you have to remember section number 96. 96 is AGM section number in the company. The auditors meet on one fine day, and that day is called as the AGM. Now in the AGM, the auditors, the shareholder decide to appoint two people, one to manage the company, that is director, and second who are to check whether director is managing properly or not. That is the statutory auditor. Statutory auditor will be appointed in one AGM and report to the shareholders in the next AGM. Statutory auditor compulsory has to be a CA, can never be an employee. For the company's own benefit and internal loophole checking, the director will appoint internal auditor. So the internal auditor is appointed by the director, he will report to the directors. Internal auditor can be a CA, cost accountant, or any other profession. Is it compulsory for him to be an employee? He may or may not be an employee. Good. Tell me what is 142? 143. Powers and duty. 140. Removal or resignation. Tell me what is 147. Contravention. 148. Cost audit. Tell me what is 145. You just sign the audit report. Tell me what is 146. Right to receive the notice. Right to receive the notice. How many of you are mentally somewhere here? Mentally somewhere here. Let's say section number 140. Mentally somewhere here. And section number 140. How many of you are mentally here? Yes. You know what has a better way. Whenever I make it, whenever I make the section number by my hand, ensure that you are writing in this location, and with that you are able to remember. I have to send my point here. Anyway, tell you what is section number 147. Contravention. Tell you what is section number 144. That is the order, not wrong. 143. Power and duty. 139. Procedure for appointment. Tell me what is section number 145. You sign the auditing. Are you there to tell me? 141. We are entering in deep dive in this. Tell me 141 and subsection eligibility, qualification, and disqualification. Subsection number 1, 2, 3. 1. Individual has to be a CA. Partnership firm. Majority of partners are CAs. Plus they are practicing in India. Subsection number 2. LLP. So LLP only a CA is authorized to act as the auditor and sign the audit. Be there. And then your subsection number 3, that is your disqualification. Now let's enter disqualification. Now, in disqualification, they have given around, I'll just tell you, we are now entering like this project. Please see here. We are entering 141 subsection number 3. In that you have clause A. Like that you have clause B, clause C, clause D, clause E. Till that you have till clause I. You have till clause, total 9 clauses are there. Okay. So we have to do this clause properly. And with clause numbers only you remember. Don't worry about it. Okay, it will be easy. Now we are entering 141 subsection number 3. That is your disqualification. Now in that first, let's do first area. What they are saying is 141 subsection number 3, clause A. In clause A, they are saying that body corporate can never be a auditor, can never be a, because body corporate, you can take the example of a company. Can you say CA Reliance Industries Limited? Can you say CA Infosys, CA Wipro? No. Why? Because the company cannot write the CA exam, so it will never have the CA degree, cannot have the CA. Company is a artificial legal person, right? Artificial legal person. It does not have body, it does not have anything. So you understand here, the company cannot be a CA, and that is why the company cannot be an auditor. Company cannot be an auditor. Body corporate cannot be a C because that body corporate cannot be the auditor. That is 141 subsection number 3, clause A. Clause A. Simple understand this? Okay. Now let's go further. We are entering B now. Okay. Now all these are a little bit trickier. Everyone please here understand with me. C. They are saying officer or employee of the company cannot be an auditor. Repeat after me. Officer or employee of the company cannot be an auditor. So next question is, sir, employee, we understand any person with whom the company has a contract of employment. The company has a contract of employment with someone, then that person is an employee, that person is an employee. So employee cannot be defined. Employee can be based on the contract. But officer word is defined in your Companies Act in a section called 2 clause 59. 2 clause 59. 2 clause 59. But 59, no, they have defined the term officer. Who is an officer? Look at the left hand side, they have said here. Director, manager. Can you see on the left hand side? Direct, extreme left, see that box. Director, manager. KMP means key managerial person. KMP means or key managerial person. That make you understand. Key managerial person. And with A, they have written any person on whose direction the board of directors are accustomed to act. Now wait for 2 years. Director is a person who manages the company. Director is defined in 2 clause 34 of the Companies Act. That is learning in law. Wait for director. Manager is defined in 2 clause 53 of the Companies Act. That is manager. KMP is defined. It is written there. 2 clause 51 of the Companies Act. Now next point is, sir, who is a KMP? Because that knowledge is very important for us in auditing also. So everyone look here, see who is a KMP. So I'm writing here something. I'm writing here MCM CCW 1 wicket keeper. I'm a cricket fan, so you get a lot of examples of cricket. MCM CCW 1 wicket keeper. Understand this. What they're saying is managing director, CEO, manager are your KMPs. Are your KMPs. Tell me the first three. Managing director, CEO, manager. Managing director, CEO, manager. Because I'm helping you in law, what I'll do is I'll teach you with the law matter only. Managing director is defined in 2 clause 54. CEO and Companies Act is defined in 2 clause 18. And your manager is defined in 2 clause 53. For the timing, just keep it in your mind. Don't worry. Look here, see. Managing director, CEO, manager. We're studying managing director, CEO, manager. Then they are given here CFO. CFO is 2 clause 90. CFO is 2 clause 90. Then you have the CS, 2 clause 24. CS is defined in 2 clause 24. And W finally is your 2 clause 94, whole time director. W is what? Whole time director. Go slow, relax. Tell me. MCM, MCM, CCW, 1 wicket keeper. Tell me guys once again. MCM, CCW, 1 wicket keeper. Tell me. MD, first M is what? Managing director. C is what? CEO. And M is what? Manager. Then below that, CFO. CFO. 2 clause 18 is CEO. 2 clause 19 is CFO. Similarly, 2 clause 53 is manager. 2 clause 54 is managing director. Below that, they are given 2 clause 24, that is CS. CS. 2 clause 24. Finally, 2 clause 94 is whole time director. 2 clause 94 is whole time director. So they have given this as the main list for KMP. Then they have said like this also. They have told about this 1 wicket keeper, which I'll explain to you here. Everyone please see here. What do you mean by 1 wicket keeper? Everyone look here, look at the screen. In a company, let's say the directors are working at this top level. There is this person here who is just working 1 level below the directors. Now this person, we'll call him as, let's say I'm writing here HOA. We'll call him as the head of accounts. He's head of accounting department. And what he does is he reports to the finance director. What they have said is this. Any person working 1 level below the board of directors. Any person working 1 level below the board of directors. Now this person, suppose he's working in whole time employment. He's working in whole time. Full time is with this company. He is so important for the director. The directors have giving him the respect. In Hindi we call it ijjat. They are giving him the respect. They are giving him the designation. The directors are telling, you are one of our KMP. You are our KMP. Where the company has made all these investments, it is there in this head of accounts person's mind. Where the company is getting all its funds from, where the company diverting its funds to, this head of accounts has everything in his mind. He has the complete control of accounts of the company. He knows how much reserves we have, how much profit we have, in the future, next 3 years, how much profit we are going to make. All these projections are there in his mind. So the directors are saying, see boss, even though you are not a director, you are working, look here, 1 level below the board of directors, 1 level below the board of directors. You are in whole time employment. And we are giving you the designation. Designation in respect of a KMP, So any 1 wicket keeper, look here, any person working 1 level below the board of directors, in whole time employment, and designated as a KMP, and designated as that person is also our KMP. So go for it. Who is a KMP? Managing director, CEO, manager. Let's go little in depth. Let's do it. Tell me. Managing director, 2 clause 54. Try to remember. 2 clause 54. Books of accounts is what? 2 clause 13. Finance 2 clause. Start knowing your mind. This is also straight. Tell me. 2 clause. Managing director is 2 clause 54. Managing director, CEO. 2 clause 18. CEO. Manager. 2 clause 53. 2 clause 53. Think like this. At the age of 18, you wanted to become a CEO. That is to clause 18. But at the age of 19, you decided that you want to become a CEO. Managing director, CEO, manager, CFO, CS, whole time director, CFO, CS, whole time director, CFO to clause 19, CS to clause 24. And then finally you have any person, any person working one level below the board of directors, any person working one level below the board of directors in whole time employment and designated as the KMP, designated as the KMP. Even that person is the KMP, even that person is a KMP. So I want you all to just keep this in mind. Tell me, what is this? MCM CCW, one wicket keeper. Tell me the entire thing. Managing director, CEO, manager, CFO, CS, whole time director. Any person working one level below the board of directors in whole time employment and designated as the KMP. Are we there? Someone understand this? That is okay. Now, I'll ask you to copy later. Just hold on, because when your brain is there in a flow, will not lose the flow. Look, you see. Director, manager, and KMP. You can debate with me saying this thing, and students have in the past, and they have raised a valid point. They have said that in the KMP definition only, we have manager there. Managing director, CEO, manager. Then again in that DIM, that area which is written on the left hand side, sir. This is we have to read it as DIMCA. We have to read it as what? DIMCA. So DIMCA is this one, not LIMCA. Because this area. This is your DIMCA. This is your DIMCA. Now the DIMCA which is there, I'll just zoom in. The DIMCA which is there on the left hand side, director, manager. There is a student rating point saying that, sir, that KMP definition also has manager and there also manager is there. And you're right, it should not be there. It should not be there. In that matter, then I have remove the definition of manager part there. It should not be there because KMP includes manager. So tell me, for the timing what they've given, you have to do that. Tell me, DI is what? Director, manager, KMP. Then KMP was what? MCMCCW, one wicket keeper. Last I given there, okay, do it this with me, this action with me, you can do it. Tell me this. Any person. Any person. I mean, any person. On whose direction? On whose direction? The board of directors. The board of directors are accustomed to act. Are accustomed to act. Accustomed means supposed to act. So accustomed means what? Supposed to act. That means any person on whose the direction the board of directors are accustomed. Once again, any person on whose direction the board of directors are accustomed to act. You know Ramdev Baba? You know Ramdev Baba, yes or no? Ramdev Baba is associated with which company? Patanjali. So Ramdev Baba one day he tells the Patanjali directors, I'm going for research and development work. I'm going to the jungle for 3 months. And there in the jungle, because the Ayurvedic products they make. No? So I'm going to the jungle for 3 months. And there, no, I'll take some bark of a tree, some a root of some plant, I'll take some leaves of some tree, a flower of some tree, create a paste, and I'm going to find new product. So directors say, okay, fine, you go and come, no problem. So Ramdev Baba goes to the jungle. He stays there for 2 months and makes this paste and all, tries everything, and he says that, okay, I found a new product here. So he takes that paste, whatever paste he has made, goes to a nearby village, a village that is connected to the jungle only. Some tribal villages there, and he goes to it, goes and meets the people. People immediately recognize him. Oh, you're Ramdev, please come, please have a seat. And Ramdev tells him that, see, I have a product for you. So this people are like, what product you have new? So Ramdev says, see, this paste which I made, no, is the cure for baldness. Is the cure for baldness. In India, there's no product for baldness. So the people say, ha, you're also one of those fake people. You will ask us to put a paste on our head, and then after that, you will tell after 50 years the hair will go back. 50 years, he'll only go. So Ramdev said that no, this will give result in 1 hour. People are shocked. 1 hour. Let's try. They gave Ramdev fruits and all to eat and all. They said, okay, you wait, we'll put this paste. And all the boiled people in the village, they took some paste, put on their head, and they are now sitting and talking to him for 1 hour, normal things. After 1 hour, no, people actually observe that hair is growing on their head. Ramdev said, great, my 2 months research has worked now. Okay, the hair is growing on people's head. Ramdev immediately went to Patanjali head office and met the directors and told the directors, we have found $1 billion product here. So many people, because of work stress and all, they are losing hair. So we have a product here called, we'll make a product and this product we'll sell it to the market. Leave all the products that you are making right now. All these stupid products that you are making right now, we'll leave everything. All this Kesh Kanti, Dant Kanti and all. No. We'll not use all those areas. We'll build a new product. Kesh Badanti. So what the Ramdev Baba said is, we'll make a new product and you get into the work. Now the director of Patanjali, what they did is, they started the production, they started the marketing, they started the sales and everything of this Kesh Badanti product, and so that the people who are suffering from baldness, they're able to recover. They're able to recover. So who is Ramdev Baba in this case? He becomes an some of you are Ramdev, do like this. You're not, but do this. Any person on whose direction, Ramdev Baba, on whose direction, the board of directors of Patanjali are accustomed to. So Ramdev Baba also becomes an officer. So officer, they have said Dimka. Dimka is very simple. Director, manager, key managerial person, any person on whose direction the board of directors are accustomed to. Once again, any person on whose direction the board of directors are accustomed to. That's what they've said. Now they've said in clause B. Now let's enter clause B and understand the meaning here. Given here, officer or employee of the company cannot be the auditor, cannot be the. My first question to you is why not? Why not? See, I'll give you my side of argument, then you tell me your side. Officer of a company is at a high level, he knows exactly how the company is functioning. Employees of the company know how the company is functioning. Who better to audit the company? Suppose if your officer is one of the officers is a director, or the employee officer is a CA, or one of the employees is a CA, then great. No, why can't you give audit? Ask them to only check the accounts of the company, because then they'll know the company inside out. They know exactly how the company is functioning, who is at the top of the company, how many departments are there. They know it very well. Rather than appointing someone from outside, some other CA from outside. If you have a CA inside the company in the form of officer or employee, that person will know the company better. No, they'll correct. No, they'll know better the departments in the company, the number of branches the company has, the number of where is the factory of the company is, what is the company's supply chain, what is the company's production cycle like, how does the company receive the money from the customers, in how many day credit period does the company give. All these things the employees, that the directors will know better. So my question to you all is, but still why have they given that auditor cannot be an officer or employee of the company? Why? Internal politics. Emotionally, emotionally attached to the company. Okay. Anything else? Students who have attended my batch earlier, no, you know the answer. So I will request you all to just sit for revision purpose. Because if you sit and answer, then students who are new, they'll not be able to answer. So next 3 days, you are not supposed to answer. You are supposed to revise. Okay. Tell me. Who is saying? Who is saying? Raise your hand. How? Example, you suppose if I purchase shares of Reliance, I don't know any employee of Reliance, so how will I influence the employee of Reliance? Think about it now. You are a shareholder, outside shareholder. Majority stakeholder can do it. Okay, fine. Fine. Tell me. Buyers how? Correct. Suppose the employee is a very honest employee. I'll give you that also. So employee is a very honest, ethical, very principled person. Then how, what is influence mean? You're right. Tell me, what does influence mean? Okay, fine. Look here, understand. When an employee goes to the company, you understand that you should understand that his entire home is running because company is paying his salary. So the employee is dependent on the company. You tell me the word, he is dependent on the company. Dependent on the company. Now look here. Suppose if I am an employee in a company, and if that company tells me, Kartik Iyer, you are a CA, so can you please be an auditor for us? I'll say no problem. So I'll ask them, how much will you pay me? So they told me we'll pay you around 3 lakh rupees for audit. So I see my monthly salary, suppose 1 lakh rupees per month, suppose. So 1 lakh rupees per month, so I'm earning 12 lakhs as my salary as an employee, plus 3 lakhs they're going to give me for auditing work. 3 lakhs they're going to give me for auditing work. I say, good. I go home and tell all my family members, see, I got 3 lakhs extra as an auditor. They're also celebrating with me. So 12 lakhs I'm getting as salary, plus 3 lakhs I'm getting as an auditor. But now when I sign, I decide no, that I become an auditor, I got stuck in a very bad way. I'll tell you why. Let's say 2 months later, I go to the company and I check the financial statement of the company and I see that, and I check the records of the company, books of account and financial statements, I check. and I see that one of the directors is involved in fraud. One director is involved in fraud. Let's say Sachin is the director, is involved in fraud. So I go to Sachin, enter his cabin like, Sachin, what is this? You are involved in fraud. 10 crores you are looted from the shareholders' money. I'm going to report this to the shareholders in the audit report. Sachin will say, go report. Report, no, go report. You can report, no problem. But remember, from tomorrow, no, don't come to work as an employee. Don't come to work as an. You're fired as an employee. You're fired as an. Now tell me what will be easier for me to not give the report or to leave my job? Not give the report. Not give the report. Or give the report by saying that there is no fraud. There is no fraud. So Sachin will go report. Suddenly when he says go report, I'll say, what fraud? This was April Fool Day prank I'm practicing. There's no fraud. Zero fraud is there. Suddenly my tone will change. Why? I'll tell you again. Why? Because I was a dependent on him. My salary is dependent on. My home is running because he's paying his salary monthly. So you understand, because the officers and employees of the company are on the payroll, that is the monthly salary of the company, they are dependent on the company. They are dependent on the company. Auditor should be a person who is independent. He should be an outside person. Suppose the auditor wants to tell fraud, he should be able to openly say there is a fraud. Company cannot do anything to him. Company cannot tell him, oh, we'll fire you. He'll say, what do you fire him? I'm working for myself only. I'm myself fired. So auditor will always, he has to be a person who is not within the company. He has to be a person who is outside the company. He should be independent of the company. Repeat the word with me. He should be independent of the company. Because the employees and officers are dependent on the company, they cannot be auditors. They cannot be. Officer or employee of the company cannot be an officer. Yeah. This is covered in 141. Number 3, clause B. Clause B. Then what is 141 section number 3, clause A? What is it cannot be an audit? 141 section number 3, clause B. Officer or employee of the company cannot be an auditor. Cannot be an auditor. Are you there with me, yes or no? Comfortable. We'll do one more area, then I'll give you a small breather. If you have PC here. Look at it. We'll take some students in the class itself, and then I'll zoom in and teach you. Just hold on with me. Let's say Sachin is an officer in the company. So I'm writing here S. Harin is also with S. What is her name? Akshat. Akshat is a partner here in a firm. So I'm writing here Akshat. What is her name? Tanmay Shri is, I'll put you as an employee in the company. And what is her name? What is S? I cannot take it. Tell me. S, I cannot take it. Not clear, understand. I want you all to understand their position together, because then only you will be able to know this point. It is point number C. This is a little deep point. Sachin is an officer in the company. Where I've written S, he is an officer in the company. So you understand he's one of the Dimkas. So we'll say currently Sachin is a director. Sachin is a director. He's a director in the company, so he's an officer in the company. Director is covered in officer. Then you have Tanmay Shri here, who is an employee in the same company. Tanmay Shri is working as an employee in the same company. Then we have partner here. Akshat is a partner in a firm. Partner in a firm. Separate firm is a CA firm, not related to the company for the time being. Outside CA firm is there, where Akshat is a partner. And Varsha is an employee. Varsha is an employee in the partnership firm. Varsha is an employee in the partnership firm. Where is Varsha? Varsha. She is a partner in a partnership firm. Okay. Now understand how it is working here. Look here, see. All 4 of them are CAs. All 4 of them are CAs. Now Sachin is an officer of the company. He said, oh, if I'm the officer, I will only do the account checking because I'm a CA. I'll only do the account checking and I will only give the report. Then Companies Act came and they dropped the bomb of 141 subsection number 3 clause B, saying that officer or employee of the company cannot be an auditor. So Sachin's face was a little small. He said, oh my God, I cannot be the auditor. So sad. Sachin is the director in the company. I told him Sachin is an officer in the company, but outside the company, Sachin is also a partner in a firm with Akshat. So here, Sachin is a partner in a firm along with Akshat. So Akshat and Sachin are partner. It is possible. He's a part-time director in the company. So he's an officer in the company also. He's a partner in a firm with who? With Akshat. So Sachin and Akshat are partners here. Now what will happen is Sachin will go to Akshat and say, see, I cannot become the auditor of the company because of 141 subsection number 3 clause B. But Akshat, I have an offer for you. Akshat said, what offer you have? So Sachin will tell, see, I am one of the directors in the company. So the books of accounts, I have complete access to it. I can manipulate whatever accounts you want, complete manipulation I can do. I can do this or this, then I can do this or this. What I'm doing, what is this? The window dressing or window dressing or and then you have to do only one thing, Akshat. You have to do this. You don't report it to the shareholder. You don't report to the shareholders. So we will manipulate the accounts and we'll take the money and we'll keep the money in our own pocket. 50% yours, 50% mine. And we'll not, and you, Akshat, because you're the auditor, you simply don't report to the shareholders. So I'll do all the fraud, you just support me. You just support me. Possible or not possible? Possible. That's why they have clearly said, look here, partner of the officer. Tell me, partner of the officer. Tell me, partner of the officer. This connection should be there. Everyone please here. Partner of the officer. Partner of the officer cannot be the auditor. Cannot be the auditor. Cannot be the auditor. So any partner who is there of the officer, that person cannot be the auditor. Akshat is the partner of the officer. He cannot be the auditor. So Akshat cannot be the auditor because of 141 subsection number 3 clause B. Because officer or employee cannot be the auditor. That is, sorry, Sachin cannot be the auditor because of 141 subsection number 3 clause B. And Akshat cannot be the auditor because of 141 subsection number 3 clause C. Because he is partner of the officer. Second. Now Sachin gave this offer to Akshat. And let's say Akshat is a very ethical person. So said, all these things I'm not going to do. No matter what such I have done, so much hard work I've done, all this Kartik lecture for auditing and all. I'm not going to, this read this degree out. If I get caught, I will take over my degree. I'm not going to do all this fraud with you. You please find someone else. I'm not in this with you. Sachin is okay. Sachin was roaming in the office. Suddenly Sachin finds Varsha. Varsha is the person who is very ambitious. Varsha is the new CA joined the office. Sachin goes to Varsha and said, Varsha, in the interview you told that you have great ambition, you want to earn a lot of money and all. So Varsha said, yes. Yes, sir, with hard work, dedication, I want to. Sachin says, what if you get money with less hard work, with less dedication? So Varsha said, yes, sir, that is also fine. Sachin will give the same amount to Varsha. He said, you're a CFO, so I am a director in a company. There I do complete manipulation of accounts. Window dressing or secretary. But Varsha, you have to do one thing, you have to not report to the shareholders. You have to not report to the shareholders. Varsha will say, what benefit I will get? Sachin will say, whatever money we manipulate, 50% yours, 50% mine. Fraud money, 50%, 50%. Possible or not possible? Possible. That's why they have said one more area here. That is, look here, everyone, look here. Employee of the officer cannot be the auditor. Employee of the officer cannot be the Varsha is an employee of the officer, because officer is a partner in the firm and then she is an employee. So employee of the officer cannot be the auditor, So till now you know two things. Partner of the officer cannot be the auditor. Employee of the officer cannot be the auditor. Tell me, partner of the officer cannot be the auditor. Employee of the officer cannot be the auditor. So they can do fraud together. Next, I said here, look here. Now, forget here, Sachin is not the partner, suppose. And we have Tanmay Shri, who is an employee in the company, but she is a partner with Akshat. So let's say Tanmay Shri is a part-time employee in the company, but she is a partner in a firm with Akshat. So in this case, what they're saying is, Tanmay Shri will take the scheme, same funda. Tanmay Shri will take the scheme to Akshat, saying that, I'm an employee in this company. I have good connection in the accounting department. Easily manipulation can happen. The director, they are stupid people, they are not paying attention only to the company. They have no control over the company. Easily, they have no control how the accounts are moving. We have good opportunity, easily fraud can be done. So Akshat will ask, what is the benefit for me? 50% yours, 50% mine. Possible or not possible? Possible. That's why they have given the third connection here. And the connection is, look here. Partner of the employee cannot be the auditor. Tell me this, partner of the employee cannot be the auditor. So Akshat is a very ethical person. Akshat says, all these things you do in other companies, not in my firm. So please, I know you're a partner here, but Tanmay, sorry, I'm not going to tolerate all these things. So Tanmay takes her around in the firm. Who does she see? Varsha. Varsha, same thing, ambitious person. So Tanmay goes and gives an offer, same offer. What will Tanmay say? See, I can manipulate the accounts, but I cannot be the auditor. But why Tanmay cannot be the auditor? Please tell me why she cannot be the auditor. You are 141, subsection 3 clause B. She is an employee in the company. So officer or employee of the company cannot be the auditor. So she goes to Varsha and says the same thing. I manipulate the account. You come as an auditor. Don't report the fraud to the shareholders. 50% yours, 50% mine. Same dialogue. No, because that is also possible. That Tanmay Shri will become the be an employee in the company. She can manipulate the accounts, and Varsha here can do the fraud. Can support Tanmay in doing the fraud. They have said here. Look here. Employee of the employee. Tell me, employee of the cannot be the auditor. Cannot be the auditor. So that leads to 4 conclusions. And what is the conclusion that can come in case study? Has come also twice. Tell me. Partner of the officer cannot be the auditor. Employee of the officer cannot be the auditor. Partner of the employee cannot be the auditor. Employee of the employee cannot be the auditor. Tell me the 4th thing. Partner of the officer cannot be the auditor. Employee of the officer cannot be the auditor. Partner of the employee cannot be the auditor. Employee of the employee cannot be the auditor. 4 things everyone. And you know in what manner they are given in the notes, in the act, they are given in such a simple manner. One cute line they give. Simple line they give. And they said, you interpret now. You know what line they gave? They gave this line. They gave this line. Any partner or employee of any officer or employee of the company. Any partner or employee of any officer or employee. Like that they are given. Because there are 2 ors in that, no, because there are 2 ors, it leads to those 4 scenarios. It leads to those 4 scenarios. Are you understanding this? Look here, any partner or employee of any officer or employee. Tell me the 4 scenarios. Any partner of the officer cannot be the auditor. Employee of the officer cannot be the auditor. Partner of the employee cannot be the auditor. Employee of the employee cannot be the auditor. So in the exam, when a question comes, you have to be very, very careful. That is why you should know the definition of officer. You should know the definition of officer. They can give in the exam like this. In A Limited, Mr. R is a company secretary. Mr. R is a company secretary. This company secretary is a partner in a CA firm. This company secretary is a partner in a CA firm. Can CA be partner with company secretary? Yes. The partner's name is Mr. P. Mr. P. So Mr. R, I'm creating a case study for you. That how I will ask you. I want you all to pay complete attention here. Everyone, please here, please here, please here. Understand? Understand. There is this company in which we have, let's say, company is called X Limited. Let's say we have a person called Mr. R here. Mr. R. Mr. R is a company secretary. Mr. R is a company secretary. Outside this, no, Mr. R is a partner in a firm. So this is, suppose that this is the firm. Mr. R is a partner in the firm along with P. Along with P. Mr. R is a CS, but P is a CA. P is a CA. R tells P manipulation of accounts is possible. Let's do one thing. You please join this company as an auditor. Join this company as an auditor. Can Mr. P join this company as an auditor? Yes or no? No. So what arguments will you write in the question, in the answer paper in the exam? You have to say that Mr. R here, no, is an officer. Mr. R is an. So they will expect you to write the definition of officer here. So you should know DIMCA. You should know. Now in DIMCA, you know, is Mr. R director? No. Is he manager? No. Is he KMP? Yes. Because in KMP we saw MCM, CCW, 1 wicket keeper. In that CCW, it was a CFO. Yes. Yes. You understand, Mr. R is a KMP, is a, and because of that, Mr. R is an officer. Mr. R is an, and here Mr. P becomes a partner of the officer, becomes a partner of the. That is why Mr. P cannot be an auditor. Mr. P cannot be an. Are you understanding? So that is why the definition is important. That you should know exactly what DIMCA is. You should exactly know who officer is, because they ask this question in the examination. If you don't know the definitions, then you will not know who is an officer. 141. 141 subsection number 1. Can you go to 1? Individual has to be a CA. Subsection number 2. Partnership firm. So or majority of partners should be CA. India. Subsection number 2. LLP. In LLP, what it is? Only a CA is authorized to act and sign. So you have IPL. IPL. Subsection number 3 is what? Disqualification. Are we there? In that disqualification, we are in 141, subsection number 3, clause A. Body form. What is object cannot be an auditor. Clause B. Officer or employee of the company cannot be an auditor. When you click on officer, that is 2 plus 59, it takes you to DIMCA. DIMCA, D I is director, M is manager, K is key managerial person. Key managerial person, if you click on that, it will come to MCM, CCW. Let's go a little bit in one minute. Keep up. Tell me what is M management. Management defined in two clause. Four. C, CEO, 2 clause 18. Then your manager, 2 clause 53. Then CFO, 2 clause 19. CS, 2 clause 24. And whole time director, 2 clause 94. And one wicket keeper. Any person working one level below the board of directors in whole time employment and designated as the KM. Designated as the KM. Are we there together? Yes or no? Any officer or employee of the company cannot be an auditor. That is given in, and sorry, that A part we forgot. A, DIMCA, K and A. A is what? Any person or rule direction the board of directors are accustomed to. Any officer or employee of the company cannot be an auditor. That is what B. 141.3 B. 141.3 C. Any partner or employer of any officer or employee cannot be an auditor. Are we there together? Yes or no? Relax for 5 minutes, exact 5 minutes, relax, then you can. Okay. Come back in 5 minutes, I'll be starting, so please don't delay. How many subjects are over now? Who took strategy management this time? Paper. Then accounts. Nikhil sir. Surname? Sir. Ah, they are. And then only two subjects are accounts, standards, and yeah, it will be good today. That's what it is given. Today, but you don't have the material right, but you will need it to revise today. Parties on the road. They are doing the diagram. Today, 3 hours. Tomorrow, Okay, you understand? Let's start. Now we are entering a very important clause, and that's why I thought I'll give you a small breather before getting into this area. It's a pretty important one, okay? So pay attention here. First question, maximum if it has come from any area from this section, this area, 1.13, is your clause D, okay? Now D is a very simple clause, but you have to understand the main motive behind it. So if you understand the meaning in law, always remember, to know why this law is there in place, the law will be very clear in your mind. If you take that as a theory something and keep biating, then that will not go. You have to always understand why that law is there. Okay, so we'll learn from that angle. You have to see and understand. First is H. Here I am taking I, N, and here I am taking G, S. So to remember here H, I, N, G, S. We'll call it as Hings. We'll call it as what? Hings. Okay, now we're going to look here. See. Now, your 141 subsection number 3 clause D, we are first entering subclause 1. Subclause 1. What does subclause 1 say? So what does this say? It says that any person who wants to be the CA or the auditor of a company, that person himself. So I'm writing here H, that person himself. Or his partner, or his relatives, They are saying here that person himself or his partner or his relatives cannot hold a single share in the company. Cannot hold a single share in the the person who wants to be the auditor, he himself. So here I've taken an example. Let's say I've taken a name from himself, I've taken Hitesh. Okay, so there's a person called Hitesh. He is the person who wants to be the auditor. He is the person who wants to be the auditor. Okay. Please don't talk there. Please don't talk. Okay. That person wants to be the auditor. He or his partner, or he or his partner, or any of their relatives, So Hitesh or Parth or any of their relatives, they cannot hold a single share. In which companies? Here in the company itself. In the companies, look here, associate company, in the company's subsidiary company, in the company's holding company, and if the holding company has any other subsidiary, then in that company also. So let's go for it. You'll call it as cash S. You call it as what? Cash S. Everyone, please here, understand. Cash S means company, A is associate company, with S subsidiary company, with H holding company, and with S is subsidiary of such holding company. Your company's holding company is one more subsidiary. Tell me your company's holding company is one more subsidiary. Your parents, another subsidiary. Your sibling, no. So you or your sibling. So basically you and your sibling are also calling it as this covered in this area. So look here. Company, associate company, subsidiary company, holding company, subsidiary of such holding company. Himself, partner, who's the relative I take you through? Partner, relative. Cannot be. Holding a single share in the company, associate company, subsidiary company, holding company, subsidiary of such holding company. They are clearly given. See. Hitesh cannot hold a single share in the company. Parth cannot hold a single share in the company. Relatives also, I'll come to that later. Wait for it. Hitesh cannot hold a single share in associate subsidiary holding a subsidiary of such holding company. Par cannot hold a single share in the associate subsidiary holding a subsidiary of such holding company. And relatives also cannot hold a single share in associate subsidiaries holding or subsidiary of such holding company. So this is your C and this is your cash S. Total you will see cash S. You will see cash S. Are you there with me, yes or no? Now my reason is not this. My question to you is why this law is there? Don't worry about remembering and all that. You will remember automatically if you know the meaning. Tell me why this law is there. Why? Why can't I hold the shares of the company? Why can't I hold? They have written this, see at the top. Holding security or interest in company, associate, subsidiary, holding, subsidiary of such holding company. They are saying that you cannot hold a single share in that. Not a single share. Reliance has crores of shares. Even if I hold one share, and I want to do audit, I cannot do that. Even if my partner is holding one share, I cannot be the auditor. Like I just said. My question is why? Ask me some reason. No. Take a call. Tell me. Students are attending you. Tell me why. Tell me. Raise your hand. Tell me. Insider information. Can you elaborate on that? Correct. Company will share all the information with you. You will come to know the status of the company, and with that, you can easily buy and sell the shares in the market. So my question to that is, another question is, if you are holding the shares of the company, think about it. When you are holding the shares of the company, do you want the share price to go up or go down? If you are holding the shares of the company, you want the share price to go up, right? Tell me, if I am the auditor, think about it. If I am the auditor, and if I'm doing the audit of the company, I'm also holding the shares of the company. I always want the share price to go up. I always want the share price to go up. Now, while auditing, I see that one of the directors has done fraud. One of the directors has done fraud. Tell me, will I report the fraud to the shareholders? No, sir, because if you report the fraud to the shareholders, what will happen? Share price will fall down and I'll lose on my investment value. I'll lose on my investment value. So you understand, they have clearly drawn the line here. They have said here, if you are a shareholder, you always want the share price to go up, so you will never report anything negative about the company. You will never report anything negative about the company because as soon as you report anything negative, the share price will go down and you will lose value on your personal investment. You will lose value on your personal investment. So they have clearly said here that the CA himself, the person who is going to do the auditing himself, or his partner, or the CA or the partner's relatives, and CA or the partner's relatives, none of them can hold a single share in the company or any nearby companies. All the nearby companies, associate company, subsidiary company, holding company, subsidiary of such holding company, subsidiary of such holding company. Because my intention will be incorrect, because I'll be always wanting the share price of the company to go up. But then I cannot report any fraud, I cannot say anything negative about the company. Then what is the use of the shareholder appointing me as an auditor? If you have appointed me as an auditor, my job is to ensure is that if I find any error or fraud, I should report to the shareholders openly. In this case, I will not be able to because my own investment is there. My own investment is there. Are you there with me? Yes or no? Comfortable here? But they are given an exception here that is in relation to relative. I want you to understand this carefully. But it's a super matter here. The lawmakers know I have found a very nice middle ground here. I'll tell you why middle ground. Understand this. Suppose if Hitesh is a partner, Hitesh is a person who wants to do the audit, Hitesh, and Rahul is his brother. Rahul is the younger brother. Hitesh, this Rahul, he has been working very, very hard. He's a stock analyst. So what he does is he does his research and puts a lump sum amount in a company's shares, hoping that this company's share price will go up. After doing proper research, proper fundamental analysis, he will do. He'll check all the ratios and everything, and then only Rahul will put his money in the company. So Rahul, he spent around 4 months researching stock after stock, share after share in the stock market. He saw all the graphs, reports, pie charts, everything he checked. And after that, he took a call that I should put 3 lakhs in the Infosys company shares. I should put 3 lakhs in Infosys company's shares. Now, after deciding he's going to do it on the next day, suddenly Hitesh comes. Hitesh, as soon as he comes home and he comes up with a box of peda and tells the family members, have peda. Family members ask, what is the good news? Like, oh, I've got an auditing in a very good company, very big company. Guess which company it is? It is Infosys. It is which company? Infosys. Rahul will say, oh, good. You're the auditor of this company. Very good. I am also planning to invest in shares of this company only. His face will be so small. Hitesh will say, no. You cannot be the auditor in the same company. You cannot buy the shares of the same company. You do your analysis, and then you must have done analysis of so many companies. You put in some other company, no, no. For my investment, Infosys is the best. For the next 10 years, it will give me the best returns. I will put in Infosys only. But if you put the money in Infosys, relative putting the money in the company, Rahul putting the money in the company, then Hitesh cannot take up the audit work. Hitesh cannot take up the audit work. Both the brothers have internal fight in the house. Hitesh telling I'll do audit only, and Hitesh telling Rahul, you don't put in the shares of the company. Rahul telling no, I'll put only. Now you see. What about my 4 months of hard work? Day and night I've been slogging on this. 2 hours I'm sleeping only in the night, and all full research I'm doing. So much hard work I've been doing for this. I come to one company and you want to take audit of that company, you leave the audit, no? That person is telling, Hitesh is saying you leave the investment. Rahul is telling you leave the audit. Brothers are fighting. And tell me, who is correct here? Both are correct. Correct. That is the point. Both are correct. Both are correct. So the lawmakers had to find a middle ground. So the middle ground that they found is this. They said relative can hold a share up to certain level in the company. Only in the company, not in associate subsidiary. Only in the company. Relatives can hold shares only in the company. How much? So they have written here. Relatives can hold shares here. Can hold securities up to face value. How much? Face value 1 lakh. Up to face value 1 lakh. Face value, not market value. What value? Face value. Face value. Reliance market value of shares currently is going at 2,700 rupees per share. The face value of the shares is currently at face value of the shares is 100 rupees per share. So they are telling up to 1 lakh face value you can hold. How much? Up to 1 lakh face value. So that much you can hold. Easy to understand this? So here both are happy. Rahul is also happy. He can make the investment. Hitesh is also happy that he can do the audit. Both conditions, they have found a middle ground. Now next situation. Sir, what if Hitesh comes home with a box of peda? And Rahul has already invested 3 lakhs in the company. Already invested. Already has put the money. If Rahul has already invested 3 lakhs and Hitesh comes home, Hitesh says, hey, I got the audit in Infosys. Rahul says, oh, yes. Just today afternoon, I put the money in Infosys. I put in 3 lakhs shares in the 3 lakhs THL, 3 lakhs value I have purchased of Infosys shares. He's telling them, no. You sell the shares immediately. I have to do the audit work. Rahul says, why should I put 3 lakhs face value I have purchased? It's a big chunk of shares I have purchased in Infosys. In this case also there can be fight. For this also the government has found a middle ground. Government has said, and look at the beauty of the law and tell you how it is made. Government told here, if Rahul is holding more than face value 1 lakh, more than face value, then he has to take corrective action. He has to take what? What does corrective action mean? He has to bring it up to 1 lakh. He has to bring it up to 1 lakh. So he has invested up to how much? He has invested currently how much? Face value 3 lakh. He has to bring it to 1 lakh. Bring it to 1 lakh. So he has to sell the shares. He has to sell the shares. Now, can the lawmaker say that you have to sell the share within 3 days, within 5 days, within 1 week? No. Why? If they do that, then what will happen? Loss can happen because it is possible that in the next 5 days, 3 days, 7 days, the market is going low. Market is going low. So Rahul may be forced to sell at a very low price. So to not cause loss to Rahul, government made one more beautiful provision. They have said here, see, if more than 1 lakh face value, then corrective action within how many days? Within. Cheers. So if Rahul is holding shares of face value more than 1 lakh, Hitesh, can he take up the audit work? Yes, he can take up the audit. Rahul has to take corrective action within how many days? 60 days. So in 60 days, whatever market fluctuations are there, whenever Rahul thinks that it is the best price to sell, can Rahul sell the shares in those 60 days? The answer is yes. So they have given enough time to Rahul also to sell the shares, to sell the. Regarding himself, partner, relative. What is a normal? We will say like this: himself, partner, relative cannot hold a single share. Cannot hold a single share in the company, associate company, subsidiary company, holding company, subsidiary of such holding company. They cannot hold a single share in the company, associate company, subsidiary company, holding company, subsidiary of such holding company. Who HPR, himself, partner, or their relatives. However, the relative can hold his shares in the company up to face value 1 lakh. If the relative is already holding shares of more than face value 1 lakh, then the relative has to take corrective action within 60 days. 60 days. So whenever this Hitesh is appointed, within 60 days, Rahul has to sell the shares and bring it up to face value 1 lakh. That's corrective action. Within how many days? Within 60 days. Going in the mind, yes or no? Repeat this part with me, then I'll go take you to the next area. Himself, partner, relative normally cannot hold a single share in the company, associate company, subsidiary company, holding company, subsidiary of such holding company. However, relative can hold shares up to face value 1 lakh in the company, not in the associate subsidiary, only in the company. That is what they have written in law. If the relative is already holding shares of more than face value 1 lakh, then corrective action within how many days? 60 days. Going in the mind, yes or no? Clear to understand this? Easy. Next. Next, they are given here, boys and girls, understand this matter. No, everyone, please here. They are given there indebtedness. Very nice point. Indebted. Now, in indebtedness, they have said indebtedness is taking a loan from someone. That's the amount of loan that you have to pay off. Now, here, no, I want you all to look at this example very carefully because this is complete example based driven. See, this is your company, and we'll go in our order: company, associate company, subsidiary company, holding company. I have written, and you have subsidiary of such holding company. You have cash as companies. Okay. Here you have look here. You please here himself. That is Hitesh, Parth, Rahul. 3 people are there. Himself, partner, relative. Relatives can be anyone. Relative list I'll teach you. Wait for it. Now what they're saying here is this. Everybody see here. If the holding company has given a loan to Parth, let's say given a loan to Parth, and the loan amount is, let's say, 2 lakhs. Loan amount is how much? 2 lakhs. 2 lakhs. Suppose the associate company has given a loan to relative Rahul, and let's say the loan amount is 2.5 lakhs. And suppose, let's say, we'll get any of these companies and any subsidiary company here. Subsidiary company has given a loan to Hitesh, and the loan amount is, let's say, 1 lakh. 1 lakh. So tell me how it goes. The holding company has given a loan to Parth at the top of loan of 2 lakhs. Associate company has given a loan to Rahul of a loan of 2.5 lakhs. And subsidiary company of the company has given a loan to Hitesh of 1 lakh. How much? 1 lakh. Loan amount is 1 lakh. In this case, what they're saying is, an auditor should not be owing a big amount to the cashless companies. If I'm the auditor, me or any of my persons means HPR, should not be owing a very large amount to cashless companies. And the large amount, what they have said is, they have set the condition exceeding 5 lakhs. Exceeding 5 lakhs. Exceeding 5 lakhs. Tell me, 2 lakhs plus 1 lakh plus 2.5 lakhs. Is it exceeding 5 lakhs? Yes, it is 5.5 lakhs. Correct? Yes or no? So in this case, in the exam, if they ask you a question and they tell me, can Hitesh be auditor in this company? The answer is no, because HPR, himself, partner, relative, are indebted for an amount of exceeding 5 lakhs. 5 lakhs. Next question. Why this condition is put? Why loan condition is put? Please tell me why. Loan condition is put. So what if you take loan from the company? You will pay off the loan. No? Why the loan condition is put? Why? Why? Anyone? Any idea? Auditor and management should always see eye to eye. Should always see. Auditor should never feel low in front of the management. Should never feel low. Whenever you take a loan from someone, even if you take a loan of, let's say, 100 rupees from a friend, and suppose a friend told you to pay the loan amount, and suppose on that day you did not pay the amount, suddenly what will happen is, next time when that friend comes to you, suddenly you will have a mentally, psychologically, a lower position. You'll like, that's 100 rupees I'll give you. That friend will tell you, no, you give me later, no problem. But still you will have a low feeling because you owe that person, you owe that person. They have said if the himself, partner, relatives, if they are owing together more than 5 lakhs, then Hitesh cannot be the auditor, because imagine the situation. Hitesh, Parth and Rahul together owe 5.5 lakhs. Hitesh joins the company as an auditor. And in the company, when he joins as an auditor, Hitesh finds a fraud of, let's say, 20 lakhs in the company. Hitesh goes to the director and says, see, this fraud is against you. Director says, what are you reporting fraud and all? You are going to take fraud, you first pay a bloody loan amount. You are not paying the loan amount. What are you showing face to us? You first pay the loan amount and then come and talk. Gone. Auditor's power, gone. So auditor has himself done a default. Auditor is indebted. Company can file a case against the auditors in relation to insolvency, saying that this person is not paying us amount. So you understand, auditor can never be in such a compromising position. Auditor can never be in such a compromising position. So they have said here, can the himself partner related take loan of small amount? Yes. Up to 5 lakh rupees you can take loan. Up to 5 lakh take loan. But you cannot take exceeding 5 lakhs. You cannot take exceeding 5 lakhs. Are you there, PS or no? So tell me, in this case, you have to ask 3 questions. Look here, see. Think and tell me. Who is taking the loan? HPR. Who is giving the loan? Cashless. Who's giving the loan? Cashless. And the loan amount, whether it is exceeding, fine. Whether the loan amount is exceeding, fine. And you have three conditions. Who is taking the loan? HPR. Who is giving the loan? Cashless. And is the loan amount exceeding? 5 lakhs. If these three questions are answered, no, then you will understand that we cannot do the audit of that company. Hitesh cannot do the audit of this company, cannot do the audit of this company. Tell me once again, who is taking the loan? HPR. Loan is taken either by himself, partner, or relative. Second, who is giving the loan? Cash. And is the loan amount exceeding 5 lakhs? In this case, the total loan amount is exceeding 5 lakhs. In that case, Hitesh cannot take up the audit. Hitesh cannot take up the audit. I'm going to change this example a little bit so that you understand what ICI has done in the past, so that you are very clear. Everyone, please see here. And look here, what I'm going to tell you. Suppose here, if they give in the question that Rahul here had taken a loan of 2.5 lakhs, and Rahul has already paid, let's say 50,000 loan amount, or Rahul has already paid 50,000 loan amount. He has already paid. And now Hitesh gets an offer from the company to be an auditor. Then we can Hitesh join the company as an auditor? Yes or no? Why do you say yes? Tell me. Go on three questions. Tell me, who is taking the loan? Have they taken the loan? Yes. Okay. Who is giving the loan? Cancel. Tell me, is the indebted amount, the amount that you have to pay, is the indebted amount exceeding 5 lakhs? No, it is exactly equal to 5 lakhs. It is not exceeding 5 lakhs. Because it is not exceeding 5 lakhs, can Hitesh take up the audit? The answer is yes. Are you there with me? Tell me first about who is taking the loan? HPR. Who is giving the loan? Cash. Loan amount should not exceed 5 lakhs. Can it be equal to 5 lakhs? Yes. Are we there? Comfortable here? Okay. Now let's see. So you understand, indebtedness of exceeding 5 lakhs should not be there. So look here, indebtedness of exceeding 5 lakhs should not be there for Hitesh, Parth, or Rahul. So all three cross. It should not exceed 5 lakhs. Next, they are given there, guarantee or security given for amount exceeding 1 lakh to cashes. Now, how does the guarantee transaction work? Everyone, look here. Understand this matter very carefully. It's a tricky one. Everyone, please see here. Again, the same structure of companies. Company here. You have the associate company here. You have the subsidiary company here. You have the holding company here, and you have the subsidiary company of the holding company here. You have Hitesh, Parth, Rahul. Now, I want to tell you an example. I want you to understand this very carefully. Let's say there is a person, some third party, some random third party. This third party went to the holding company and asked for a loan. The holding company did not give a loan. So this third party was walking on the road, and he chose a corner in the road. He was sobbing there, he was crying there. Now one day what happened is Parth, or we'll say Hitesh only. Let's say Hitesh goes to this person and asks him, why are you crying? He's so I'm on the road crying. So yeah, what is your trouble? Please tell me. So this person says, no, I went to the holding company, I wanted a loan, and they told me that the loan amount is, if I want a loan, they will be able to help me, but they are not giving me the loan now. What to do? So they say, which company is this? So he says, no, it is X Limited, a company called X Limited. So they said, oh, that X Limited, don't worry, I have good connection, I have a CA, don't worry, we have the connection in that company, you come with me, I'll ensure that you get the loan. So Hitesh takes this third party to that company and tells the company, please give him whatever loan amount he wants. So please give him. So company says, this person may not pay the amount. If he doesn't pay the amount, do you take the guarantee that he will pay the amount? So Hitesh says, yes, I'll take the guarantee. So you understand what will happen here. This H Limited is giving a loan here of, let's say, loan of 70,000. Loan of how much? 70,000. And Hitesh has given a guarantee, let's say of the same amount. Hitesh has given a guarantee of 70,000. What does this mean? It means that if that person, that third party doesn't pay the loan, who will pay the loan amount then? Yes, 70,000. One more incident happened. Let's say after a few days, another random person was crying, and he came out of this associate company, and this person was crying here. Then Rahul approached this person. Why are you crying? No, I wanted the loan amount. This company is not giving me loan. So Rahul was like, no, which company? This company. Now Rahul took that poor person, that third party, to A Limited, and it went to A Limited. And Rahul to A Limited, why aren't you giving the loan? So A Limited will say, this person may not pay the loan. Also, you give the loan. No, I'll give the guarantee. Here, A Limited has given the loan here, and let's say the loan amount is of, we'll take 40,000. Loan amount is of 40,000. And Rahul here has given the guarantee to A Limited that if that person doesn't pay, then I'll pay. That person doesn't pay, then I will pay. Now, in this situation, what will happen? If this company, Hitesh, gets an offer from this company to be an auditor, and suppose Hitesh takes up the auditing work, Hitesh will get stuck. And again, he will feel that low feeling that a person who takes a loan gets. What will happen is, Hitesh will go to the company and will tell the company, this fraud is there against you, directors, the fraud is there. Why have you done this fraud? Directors will say, you first shut up. You had given a guarantee for that 70,000, that money has not come to our holding company. Your brother Rahul has given a guarantee to our associate company that 40,000 rupees has not come. Total amount is 1.1 lakhs. Total amount is 1.1 lakhs, and 1.1 lakhs has not come. So the guarantee amount is exceeding 1 lakh. Guarantee amount is exceeding 1 lakh. Suddenly, Hitesh's face will be so small. Hitesh will say, I'm very sorry, we'll pay the amount, we'll pay the amount. Company says, and you're bringing this fraud matter to us? You first pay your amount, you're defaulting on loan, and you're telling us that we are doing fraud. God. And that power of the auditor, gone. Now the auditor will not be able to see eye to eye with the management. Whenever the management walks from there, auditor will go from the side only. Because he has to pay that much amount. So what they are saying is, if you have given a guarantee of exceeding 1 lakh, you cannot be the auditor. You cannot be the auditor. Now, in this case, you have to be very careful of what I'm going to tell you. You have PCR. We are concerned with the guarantee amount, not the loan amount. We are concerned with the guarantee amount, not the loan amount. Why I'm telling you this is, boys and girls. Suppose in the question, if they give you the exam, if they have done in one of the RTPs earlier, so question can come on this, please see here. Suppose if they say like this, that Rahul here has given a guarantee to A Limited of only 30,000. So A Limited has given a loan of 40,000 to this third party. And Rahul has given a guarantee of how much? Only 30,000. Rahul has told A Limited that, see, I'll be able to pay only 30,000 if this person doesn't pay. Are you okay with it? Then you give the amount. And suppose the company was okay with it, A Limited was okay with it, but Rahul has given a guarantee of only how much? 30,000. Now tell me, Hitesh has given a guarantee of how much? 70,000. Rahul has given a guarantee of how much? It is how much? It is exactly 1 lakh. Tell me, is it exceeding 1 lakh? No. Then in the exam they ask you, can Hitesh be the auditor of the company? The answer is yes. Because the amount is not exceeding. So in this case, we have to answer 4 questions. First of all, tell me the 3 questions that we did in indebtedness. In 141, subsection number 3, clause B, subclause 2, was indebtedness. Tell me what that matter was. Tell me, who is taking the loan? HPR. Who is giving the loan? Cash. And the loan amount should not exceed 5 lakhs. Are you there? In this, there are 4 questions that you should have. 4 questions. Repeat after me. Look here. Complete logic, you have to understand them. Look here. Tell me, who is taking the loan? Third party. Who is taking the loan here? Third party. Random third party is taking the loan. Third party taking the loan. Who is taking the loan? Third party. Who is giving the loan? Cashes. Who is giving the guarantee? HPR. And is the guarantee amount more than 1 lakh? These 4 questions you have to ask. Tell me once again. Who is taking the loan? Third party. Who is giving the loan? Cash. Who is giving the guarantee? HPR. And the guarantee amount should exceed 1 lakh. When all these 4 conditions are satisfied, Hitesh cannot be the auditor. Hitesh cannot be the auditor. But the guarantee amount is supposed to be up to 1 lakh, then he can be the auditor. He can be the auditor. Are you all there with me? I'm there in this world. There is all clear, simple. Any queries still here? Any query, then openly ask. Okay, these are case study based questions in the examination. Let me tell you. Then you will see each matter separately. So if the rate is holding up to face value 1 lakh, so that condition is not affected. So fine, you can be the auditor. Second condition, tell me. Indebted how much? How much lakhs? Then that is affected. If it is greater than 5 lakhs, then that is affected. Then you cannot be the auditor. You can still continue the audit. Not less than up to 5 lakhs, you have to say. Up to 5 lakhs, you can continue to be auditing, no problem. We have to see individual matter case separately. We'll take up, no, why we are stopping at that. We'll take up the matter. Everyone look here, see. Here are a good question. Everyone please see here. Understand, look here. Company is there. Understand. Look here. See, all the student questions, no, give me very good prelim paper question set. Okay, no? So what I do is I Bangalore student whatever questions they ask, no, I ask in prelims in Mumbai. Mumbai student what they ask, no, I ask in Bangalore. So look here. See. This is your subsidiary company of such holding company. Subsidiary company of such holding company. And this is your associate company. This is your associate company. Now, my dear friend, look here. I'm going to tell you one example. Look here. See, you have himself, your partner, your relative. We'll say here, relative is holding shares of a face value 90,000. Face value how much? Tell me, can the relative hold? No problem. So tell me, in this situation, can Hitesh join the company as an auditor? Yes. So I'm putting a small tick mark here. So for the first case, yes. Fine. Second. Now, second case, I'll show in another color. See, look here. Suppose if this subsidiary company has given a loan to Parth, and the loan amount is, let's say, we'll take 5 lakhs. Loan amount is exactly 5 lakhs. And Parth has to pay this loan amount of exactly 5 lakhs. He has not paid a single rupee right now. Tell me, can Hitesh take up the audit work? Yes, he can, because we are looking at that matter individually. Simple. Third matter is, suppose if in this case we'll take one more matter. Let's say we'll do like this. Look here. Parth has been given a loan of 5 lakhs. Hitesh has given a guarantee to this company. Hitesh has given a guarantee to this company on behalf of Parth only, on behalf of Parth. So in this, the third party is who? Parth. And Hitesh has given a guarantee, and the guarantee amount is 1 lakh. Guarantee amount is 1 lakh. Can Hitesh do the audit work? Yes, he can. So I hope you understand here. We are combining all three matters, but we are looking at the three matters individually. You are looking at the three matters. Very good question. Are you understanding my point here? So tell me, you will understand. Relative up to face value 1 lakh. Is it getting? Is it exceeding? No. We can continue. No problem. Okay, loan amount is exactly 5 lakh. It should only if it exceeds 5 lakh, we cannot take a audit. In this case, it is up to 5 lakh. And the guarantee is up to 1 lakh. So in that case, there is no problem. There is no problem. Tweak this a little bit. Let's say here, if I say that the loan amount is not 5 lakhs, loan amount is here 5.1 lakh, then correct, because then this red will become cross. This red will become cross because the loan amount is exceeding 5 lakhs. You have to look at each situation. You have to look at each situation. Okay, that is area of PC or understanding. So you'll understand here. I'm just putting a cross here, and cross here. Guarantee or security. Guarantee or security. Very simple here. Okay. And this is your 141. Subsection number 3. Clause D. D subclause 1. D subclause 2. D subclause 3. So we are in 141. Subsection number 3. Clause D. Subclause 1. Holds any security or interest. Subclause 2. In the amount of exceeding 5 lakh. Suppose the guarantee or security one amount exceeding 1 lakh. Are you there with me as well? Comfortable here? Okay. Next question is, sir, who are relatives? Sir, people who call us before the examination and after the examination to know our result. They are relatives. So, my dear students, tell me, look here. Who are relatives? They are given relative definition in a section called 2 clause 77. 2 clause 77. I want you to look here and focus, understand who are relatives. Because wherever we see a Rahul is relative. So who is a relative? That is given here. Relatives, they have said here, first of all, Hindu undivided family members are relatives of each other. So the karta and the co-parcels are relatives of each other. Second, they said husband and wife are relatives of each other. Husband and wife are relatives of. Thank God they said correct now. And last they said as prescribed. As prescribed. Now, when you click on this as prescribed, going to clause 77, it takes you to a rule called Rule 4. Rule 4. So, there's a Rule 4 in the company's specification of definition details rules. In our book, everything, when you get the book, it will be written there. Rule 4 of the company's definition of details rules. Okay. Rule 4 of the specification of definition of details rules. Like another rule is there. There they are given as prescribed, and which other parties are there? Tell me, is Chikkappa your relative? Mama your relative? Mama, mother, brother. Relative or no? Yes, no, we call relative, no? What about the grandfather? Grandmother? Yes. Suppose when you get old, your grandchildren, your relatives, no? Companies Act 2013 says in Rule 4, relatives are who? Look here, see. Everyone see, look here, understand. Father and mother married. What is that? They married? No. You married? No. Then after a few years, you were born. After a few years, brother was born to you and sister was born to you. And after a few years, you did your hard work. Currently, you are at this stage in life where you are studying so much. And one day, the most dangerous person will enter your life. Spouse. Most dangerous person. Mark my words, you will not remember. Okay, no. For the boys, I'm telling boys, because then after that, suppose with your spouse you had a son, and after a few years you had a daughter. Son got married, son got a very dangerous person in his life. Son's wife. Son's wife. Now, she's so dangerous, she's not coming only on the screen. Wife. Daughter got a very good person as husband. Okay. So you have your, yes, there your father, mother, brother, sister, spouse, son, son's wife, daughter, husband. They are covered in the definition of relatives as per the Companies Act. So when you say as prescribed, and in Rule 4 they are given what? Tell me again. Father, mother, brother, sister, spouse, son, son's wife, daughter's husband. Daughter's husband. Like that they are given. Now look here, see everyone understand. They have said here. Father including stepfather. Father including stepfather. Mother, step, you know what step is. Watch any TV serial for 10 minutes. You'll understand what step is. Entire TV serial is running on that only. Father including stepfather. Tell me. Father including mother including stepmother. Mother including stepmother. Brother including stepbrother. Sister including stepsister. Spouse no step at all. Okay, no. We are not America. We are India. You know. We have one spouse. We stay with that. You know, because we are scared. Okay, that is. Then you have son including stepson. They are given son including. Unfortunately, not till now in the law, no, daughter is just given a daughter. They are not given stepdaughter. They are not given stepdaughter. That is given daughter in the law. After around 19 years, okay, no, I'll be coming to Bangalore again for asking for votes. Okay, and if you vote for me, I'll become Law Minister of India. Vote for me. First amendment I'll do as soon as I enter office is daughter includes stepdaughter. If son is there, why not daughter? So son includes stepson. Daughter should also include stepdaughter. No, they are not kept till now. Okay, no. So after 19 years, you know, have plans. Okay, we can see. And father including step, whatever I circle is step. Tell me, father including stepfather, mother including stepmother, brother including stepbrother, sister including stepsister, spouse, son including son's wife, daughter and daughters. They are the little. They are the little. So Dodappa, Dodamma, Chikkappa, Chikkamma, your Atte or Atte, what do you call it? Atte or Atimbe? So in Tamil we say Atte and Atimbe. So what do you say? And Atte's husband? Atte's husband is Mama. Mama. Oh, I didn't know this. So Atte and Mama. So Atte, Mama, Mama, Mami, your cousins, all these are not your grandfather, not related. Grandchildren, not related. I'm not asking you to break your ties today with them. This is the definition as per the Companies Act. Definition as per the Companies Act. Are you understanding my point here? Who are covered in relatives? So whenever we say relatives as per Companies Act, they should be there in your mind. Tell me. For 2 cross 77, tell me. Hindu undivided family members are relatives of each other. So Karta and the co-partners are relatives of each other. Then you have the husband and wife. Then you have as prescribed. Prescribed given in Rule 4. Then you have in Rule 4, father including stepfather, mother including stepmother, brother including stepbrother, sister including stepsister, spouse, son including stepson, son's wife, daughter's husband. They are the covered relatives. You should understand this area. I want you to give the heading relative. Just copy this somewhere, please. Give the heading the relatives. Then we'll revise, and that's it. From tomorrow, your class will be from 7 to 9:45 first session. Second session will be from 10:15, around 9:45, 9:45, 9:40, sometimes 9:50, around that time, depending on that area. And after whenever I give a break, I give half an hour. That I am promising. Don't think, oh my god, 9:45 means 15 minutes break only. Enjoy the break. But after half an hour, we'll stretch it till 12:45 every day. Okay, I stretch it 12:45 every day so that on the last day I don't have pressure of completing the portion. There's some extra portion in that, and I'm hurrying on the last day. I don't like that. I prefer completing maybe 1 or 2 hours before only, so that we are able to relax and complete it, and then we are able to complete the portion. So that on the last day, because I've seen the earlier batches in Bangalore, that if we don't stretch it at the beginning and last there's some extra portions by chance pending because we take a lot of examples, some queries come, and all these things I have to accommodate time for that. So every day we'll be stretching an extra 15 minutes every day. So just bear with me for that. Okay. So 7 to 9:45, and then half an hour break mostly, and then we'll go for 10:15 to 12:45. Yeah, 2 sessions will be like that. Please copy this. Please copy this. Today I'm leaving you all at 10 to. Whatever is there, take images. You can copy at home, no problem. Okay. Any images, any diagram that I'm not able to give you time to copy in the class, there can be some, because we are going to make a lot of diagrams in your new portion. There are a lot of diagrams which I'll be asking. You will be making a lot of summary notes also in the class so that new portion, the tracking is proper. But I want you all to ensure that you are, if we are not able to give the images in the class, then ask me at the end of the class. I'll ask you to take an image and please copy it in your notebook at home. Okay. Please copy this. If done, then let's revise it quickly. Done, everyone copied? Can you proceed? Go for it, tell me. Since morning, whatever we have done, just revise it quickly, then we'll leave. You have to do one step every day. Every day, whatever we have done, okay? I'm going to tell you, we'll just revise for the right this. Everyone revise it. First is your books of accounts. Books of accounts is divided into clause 13. Books of account is record of money received and expended, sales and purchases, assets and liabilities, items of that is Mr. Spend. Then you have 2 clause 40. That is your financial statement. 2 for it, balance sheet, profit and loss account, cash flow statement, explanatory notes, and statement of sales and equity. Who are the owner of the company? The beta 1 called as AGM section number. Because the AGM timing is 9 to 6. Okay. AGM is 96. That means in the AGM, the shareholders take 2 important decisions. Who will run the company? Director. They are the management. They are the who will see the director of the running the company properly or not. Has to be a name, cannot be an cannot be an employee because of 141 subsection 3 clause B. Remember, officer or employee cannot be the auditor. Remember that? The auditor is appointed in one AGM will report to the shareholders in the AGM. For the company internal development, the manager also appoints the internal auditor is it can be a CA, cost accountant, or any other professional. Internal auditor may or may not be an. That's very easy to understand. Okay. Tell me the next area. Tell me this. Just remember this. Internal auditor is appointed as per section 138. Internal auditor is appointed as per section number 138. So in law and law professor teaches you, will teach you 138. Don't worry. Internal auditor is appointed as per section number 138. 138. In our portion also a little bit it is there. We'll see that 138. Just write the 138. Easy to understand this. Can you go further? Tell me this. Section of the company is that go in order. 141. Between qualification and disqualification. 139. Procedure for appointment. 142. 143, terms and duties. 144, services the auditor cannot provide. Before every AGM, one right, one duty. One right, one duty. One right to receive the notice. That is 146. 145, to sign the audit report. Very nice. During the tenure, auditor can be removed or he can resign. 140. 140. Then after that, you have 147. 148. 148 together with auditor. Confirmation and you'll be seeing everything in depth. Easy to understand here. Next one, tell me. Then we are doing section number 141, subsection number 1. That is the individual. Individual has to be a CA. Below that, partner. Majority of the partners are CAs and they should be practicing in India. 141, subsection number 2. LLP. Only a CA is authorized to act as an auditor and sign the auditor. Easy to understand this area. After that, you will have the disqualification. Disqualification is covered in 141 subsection number 3. Read with rule 10. Good. Read with rule 10. It is written at the top. Rule 10. Now tell me, in this we did 141 subsection number 3 clause A. Body corporate cannot be a auditor. Cannot be an auditor. Clause B. Officer or employee cannot be the auditor. Hold on. Officer is defined in 2 clause 59. That is DIMCA. DIMCA. 2 clause 59 is officer. 2 clause 59 is okay. 2 clause 59 is officer. And 2 clause 60 is officer in default. Officer in default. Just remember two sections, subsection numbers. 2 clause 59 is officer. 2 clause 60 is officer in default. Officer is DIMCA. Director. Manager. Key managerial person. Wait. Key managerial person is who? MCCCW, one wicket keeper. Managing director, CEO, manager, CFO, CS, whole time director. Any person working one level below the board of directors is whole time employment and designated as the KMP. Designated as the KMP. Are you there with me? So good. A is what? DIMCA. A. Any person. In direction. The board of directors are. Once again. Any person. No. I don't want you all to do action in a very lazy manner. Okay, some people are doing the hand on the way like this. Be open, relax, and tell me. Any person on whose direction. The board of directors are. When you make big action, no big action, your brain knows. Don't sleep, be alert. Okay, no. If you do like this, your brain knows. So whenever we do action, no, do openly. You're sending a signal to your brain that I have to be active. I have to be telling any person on whose direction. The board of directors are. Are you there with me? There is two clause. There is 141, subsection number 3, clause B. Officer or employee cannot be the auditor. Officer we have seen now. We have seen. 141, subsection number 3, clause C. A partner or employee of any officer or employee cannot be the auditor. Go with me. Partner of the officer cannot be the auditor. Employee of the officer cannot be the auditor. Partner of the employee cannot be the auditor. Employee of the employee cannot be the auditor. Good. 141 subsection number 3 clause D. You have hints. H was 141 subsection number 3 clause B subclause 1. In that H holds. Look at himself, partner, related. Hitesh, part, round. Himself, partner, related. Cannot hold a share up to cannot hold a single share. Cannot hold a single share. In the company, associate company, subsidiary company, holding company, subsidiary of such holding. Are we there together? However, relative can hold shares up to face value 1 lakh in the company. If the relative is already holding shares of more than face value 1 lakh, then corrective action within how many days? 60 days. 141, subsection number 3, clause D, subclause 2. Indebted. Indebtedness of an amount exceeding 5 lakh. So himself, partner, relative together cannot be indebted for an amount exceeding 5 lakh. Now, in this, you should know the questions everywhere. Look at who is giving the loan? Cash. Who is taking the loan? And loan amount should not exceed 5. What loan amount? Indebted amount. Indebted amount should not exceed. The amount that SPR has to give cash should not exceed 5. Can the loan amount exceed 5? Can the loan amount exceed 5? Yeah. Indebted amount. How much they owe? That's not exceed 5. That's not exceed 5. No. Company has given loan to Parth. Company has given loan to 6 lakhs. How much? Parth has already paid 2 lakhs. Parth has already paid 2 lakhs. The loan amount is how much? 6 lakhs. Indebted amount is how much? Tell me, is the indebted amount exceeding 5 lakhs? No. I don't understand my point here. Then Hitesh can join the company as an auditor. Next, tell me. Guarantee security. Guarantee security was 141 subsection number 3, clause D, subclause 3. Himself, partner, relative should not give a guarantee to the cash exceeding. Tell me the question. Who is taking the loan? Third party. Who is giving the loan? Cashes. Who is taking the loan? SPR. Loan amount should not. Sorry. My mistake. Who is taking the loan? Third party. Who is giving the loan? Who is giving the guarantee? SPR. Guarantees the amount should not exceed 1 lakh. Are you there with me? Yes or no? Tomorrow, whatever we have done till now should be properly revised. Okay? I have to come. Audit, passing, whatever pack later 2 minutes. I don't like when I ask me and somebody's packing it tells me that, oh, you are here for no purpose. Yeah. So give a little respect, I'll give you respect. Tell me this. In ICI, audit has the worst passing percentage of all 8 papers earlier, now for your 6 papers. Audit passing percentage is 13% as per the last year, 13. I hope you know the it was 12.87%. I'm rounding out and giving it 13%. It means that 87% students are scoring less than 40 in audit. And only 13% students are scoring 40 plus in audit. If I go to the figure, if they are not given this figure, but if I think about it, of students who are scoring 60 plus in audit, it comes in single digit percentage. So you understand here that auditing is a unique subject. When I teach law, no, I don't specify too much about revision and everything because I know law, once you catch the concept, no, will be able to do that law paper very easily. So that is not a troublesome matter. Because in law, you just catch the concept, you understand. Audit is not like that. Audit will require daily discipline. And this, I'm genuinely telling you, the moment you leave daily discipline and audit, no, you are going to have a very bad time in our audit lectures. The reason is, suddenly when we are revising, you are not able to recollect and others are saying the point. Suddenly you will feel at that time, oh my God, what is this? I'm lagging behind. And 2-3 days you lag behind. Now suddenly one chapter is done. More 2 days you lag behind, another chapter is done. Another 2 days you lag behind, another chapter is done. Some chapters which are there, which will get covered in one Monday. Or we have a chapter called chapter 6 called audit documentation. That audit documentation chapter is hardly 5 sides. Around 12 answers are there in that. That area will be covering it in hardly 2.5 hours. We'll be covering that entire one chapter because ICA has given that chapter in that manner. So you understand that daily revision, if you don't do in auditing, later on you will realize, oh my God, class is over. Kartik sir has taught, I have understood it. But the problem is I did not get time to revise because the daily discipline is lacking. Every day, revise little by little so that in the end you don't feel the burden of revising everything together. In audit, you have to do that. If you do that, what I'm promising you is you will 100% score 60% auditing. That is my guarantee because you are disciplined. Auditing doesn't reward the student for hard work, doesn't reward the student for intelligence, it rewards the student for discipline. Daily after I teach in class, you have to tell I'm not going to sleep till Kartik or whatever area he has taught, I'm completing at 4. If you do that, no, then our audit journey will be very smooth. You will understand faster, you will enjoy the lectures more because suddenly you are able to build connections. Well, I'll be giving a lot of examples. I'll tell you, remember that chapter we had done this example, that you will be able to recollect. I'm understanding this. So every day, starting from today, your audit revision has to be done. Whether it is Sunday, Saturday, any day, fun day, whatever it is, you have to first revise, then do whatever you want. Are you there with me, Asam? I see you tomorrow. Take care. Tomorrow we'll see a lot of songs and all. Bye.